been a surprise that we haven't had that. For me, the key is the demand-supply imbalance in the U.S. We've had a chronic under construction post-GFC, and you look at the inventory for existing home sales, especially, it's pretty low. And then you have the mortgage lock. Why would you move right now when you've locked your mortgage at 3% and new mortgage rates are 7%? So I don't think the risks of disinflation in the housing market are as high as they are in the UK. Very different housing markets, very different mortgage systems.
The pass-through just so
Jonathan
much faster.
Can tell you.
So much faster, Lorena, I know. It's just ridiculous. The differences are huge.
The differences are huge. You've been, frankly, with all the American press, John, I think you've really led on this. What I would suggest in the reading I've done over the last number of days, including yesterday when I was off, I read a lot on multifamily housing.
What did you learn?
I learned that America has a corporate investment in multifamily housing, and they've gone full animal, and it's like way overbuilt, and they look for rental compression throughout, not greater New York, because we don't do multifamily housing, but across this nation, rents will come down.
Pushback's going to be huge in the next 12 months going into the election. Lorena, thank you. Lorena Urici there of T. Rowe Price. If you are just tuning in, welcome. Your equity market on the S&P 500 negative by 0.4%. Now, if you tried to watch the US Open in America and you have Spectrum, you've probably struggled to do that because ESPN, the Walt Disney Company, are having a little bit of a battle about all of that, TK. We're going to have a chat with Michael Nathanson a little bit later this morning in about 5 minutes' time.
And again, this goes to the heart of the matter, which Moffat and Nathanson have nailed, which is cord cutting. I mean, the world has changed, and we've been waiting and waiting and waiting and waiting, and it's now the time. I just look like everybody else at the action that I see at home. Cable's dead. That's my summary.
Sign up to Hulu is the message from Disney, maybe, and then you get ESPN.
What do you think? You use Hulu. I don't use Hulu.
I get Hulu. I have ESPN as a part of that, Disney Plus as well. It's getting more and more expensive. The first time I got that, Tom, it was
like they gave it to you. Yeah.
Way cheaper, and now it's pretty pricey. Throw in broadband, and you've got a pretty expensive monthly bill there.
Well, I just think it all lies with sports, and that I think is what was really coming to the fore. And then whoever wins the sports, and sort of the key teams, the key Lionel Messi's of the world is going to win, and that seems to be the key.
I watch Formula One on the Formula One app, which is British announcers, Sky TV, I believe. I don't watch it on ESPN or that.
That's interesting. I watch it through ESPN.
I don't. I just don't.
What are you watching it on?
I'm watching it on an app called Formula One, where everybody looks like you. They're all out there on the track beforehand. And,
what do you mean they look like? What does that mean?
More details.
They're like European and cut and chisel.
Like
they're wearing Moncler and Celine and all that, and they're like
skinny
Monza skinny tie, and they're all hanging out going,
on the grid.
You know, max, max, max. And they have little blankets over the tires.
Is that what we sound like? Max, max, max?
Yes, they have blankets over the tires.
Please, I might not be back.
So let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with the plan.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
If you look through a variety of earnings calls, companies saying consumers are becoming more cost conscious. They are pushing back. They are adapting to this intense price environment around them. So I would say expect some moderation. From my seat, I wouldn't see that as reason to panic, though. I see that as evidence of rationality.
The brilliant Laurie Calvasina, head of US equity strategy at RBC Capital Markets. Welcome to the program. Your equity markets session lows on the S&P 500, potentially a third day of losses. We're down here by 0.4%. Our next story, this one right here, a contract dispute between Disney and cable TV provider Charter Communications, leaving millions without ESPN, just as the NFL football season kicks off tonight and as the US Open is ongoing. Now, both companies steering customers to online services, Disney running ads to subscribe to Hulu Plus Live TV, its own cable alternative. Meanwhile, Charter urging customers to sign up for rival Fubo TV. TK, I'm not sure anyone wins when stuff like this happens.
Well, who wins is, I guess, the theory was the customer wins. But people like John Farrow, who have to see the tots on the weekend, have 17 different things. So, John, we've all failed at this because we've all added back to what was a cable TV bill of years ago.
The bundle's back.
The bundle's back.
The bundle's back. It's so expensive now, it's ridiculous.
Yeah, we're going to get to Michael Nathanson here in the morning, but just one more comment on this. This time does seem different. I mean, Charter has said enough. I don't know what that means, but, that's where we are.
Oh, you don't think they're going to sort this out?
I don't know. Okay. They always do at the nth hour. Someone who keeps track of the nth hour. We're going to get to this right now. It's so important. Michael Nathanson joins us, senior research analyst, SVB Nathanson. Michael, you guys absolutely nailed cord cutting. Where are we in the continuum? If you were talking to Charter management today, how much worse is this going to get for the Charters of the world?
Yeah, good morning. It's an interesting question. Craig Moffat, who covers Charter, would say, look, Charter is becoming indifferent to being in the video business, right? So it's not the business it was a decade ago. But going forward, they're saying to us, we don't really need to be in this business anymore. It's a low-margin business. Broadband and mobile phone is our future. If you keep pushing rates as high as you are, Mr. ESPN, we can't afford to actually service this business anymore. So it's bad enough for them to walk away from video, which is a shocking statement given that they have the more video customers than anyone in this country right now.
Michael, how do you think this gets resolved, this current spat? What do you think the end game looks like?
John, I would have thought it'd be resolved by today, right? I think this goes into another weekend. The end game, if it's not resolved by Monday Night Football, Bills, Jets, I think what happens is that Disney will be dropped, ESPN will be dropped from Charter systems, and that Disney will have to work extra hard to convince people who are in Charter to take either Hulu or YouTube TV, right? So I think, if this is not resolved by this weekend, it's a huge problem. The problem here is that Charter wants the apps that Disney is selling to its own customers given for free to Charter's customers, right? So we all complain about the billing and the double, the expenses of now building a new bundle. They want to give that bundle back for free, the streaming bundle, to their customers. And that is a non-starter, right? So the ask is so wide from what actually Disney can do. So we're not very hopeful this can be resolved.
Pretty embarrassing at the moment, Michael, given that we've got tennis players in news conferences at the US Open saying they can't watch the tennis themselves from their hotel rooms. Now, when we think about losers, I'm thinking first and foremost of the consumer, the customer who can't watch the sport they'd like to watch right now without paying up for alternatives. Michael, who is the big loser out of these two sides in this conflict currently?
The big losers are both. I would say to you, the bigger loser in the long term, if this is not resolved, is Disney, because this will become standard operating procedure across the industry, right? So Disney, which has a ton of fixed sports contracts, will lose distribution and carriage across the pay TV world, right? So that is untenable. It's unthinkable a week ago. Charter and the rest of the video business will say to you, look, we're indifferent. We've seen other cable operators de-emphasize video. So the big lures, so John, play it forward too, will be sports leagues, right? All the leagues and all the players who have counted on TV inflation to pay their salaries, that's going to be a huge challenge going forward, right? So this is the beginning of a multi-layer problem for a ton of industries that that no one's thinking about right now.
Michael, does it really point to a new model for both sports and for streaming? And it's a model really pioneered by, or perhaps exemplified by Lionel Messi and what he's doing with Apple Plus, given the fact that he is getting a chunk of that. There's the revenue, there's the upside. And oh yeah, Apple Plus signups have been through the roof in response to his celebrity. Is this the new model and the winning model that you foresee going forward?
See, Lisa, I would have said to you, the new model is the old model. The old model will work well, right? Which is you'd one place, one bundle, one linear bundle where all your sports were available, right? And for the life of us, we don't understand why the industries, both media and distribution, have not worked to make a skinnier bundle of sports. John talks about, Peacock and Premier League. That content should be in the bundle. When the U.S. Open's playing the first couple rounds of golf, I want to see it on ESPN. The problem is that the two sides have not come together to create a new bundle, and thus all the rights are fragmented. So I am very fearful of the consumer experience going forward if it's not solved. It is suboptimal, as you guys have joked about, to watch 17 different sports apps to watch your team. Yeah. And they're killing what was the golden goose. And it drives us crazy that people want to build over-the-top sports apps when the model worked in the old bundle. That was the best way to get sports. It was all there.
Yeah. Michael Nathanson, buy, hold, sell. Disney I've enjoyed from $189. Loaded the boat on my trip to Disneyland in Anaheim. $189, and we're enjoying it at $81. You got a rebound to $115 and an outperform. Justify your outperform.
Yeah, so we upgraded it when Bob Iger came back at 90. We're down, 10%. The call here is that their streaming business should be a lot more profitable than it appears today. When they buy in Hulu, which is probably going to happen by the end of the year now, we think there's a lot more margin opportunity at streaming. Plus, the park business is close to where the stock value is today. So our call is you're buying the stock with parks fully valued and an option on streaming profitability. Their margins are -10. Netflix margins are 20%. So we think that's the big difference. The bundle, really, this is a lot of noise. It doesn't matter that much in the long term because the market puts so little value on linear assets, right? Look at where Paramount trades or Warner Brothers trades. They're lowly valued companies, and that's not the call of Disney. It's parks plus streaming.
Yeah, Michael, quick here because John wants to get in. If you have that where it's a parks with a bolt-on streaming for free, great. Can you generate a free cash flow out of the parks business to support the dividend, support use of cash inside?
You will, it's a great question. The company used to make $10 billion of free cash flow. They make $4 billion today. $4 billion is largely parks. So you would say $4 billion is your support for cash flow, for dividends, for a buyback. It'll be a lower cash flow business, but it'll be a higher multiple business. And, Tom, there are media companies that have 20% cash flow yields that no one cares about today, right? So we're looking at cash flow yields just explode and no one cares because the sustainability, as you guys have asked this morning, is certainly in question.
Michael, I can't think of a CEO that is more loved, despite the fact the stock's not doing well. Goldman is down 6% year to date. Solomon gets a ton of bad press. Disney's down about 6% year to date. Bob Iger still gets all this media love. Michael, where does that media love come from? Is he doing a good job? These problems were all blamed on Chapek, who was in the job for 5 minutes. When does Bob Iger start to own some of these issues?
I think, our call on this is give Bob the 2024, right? You're turning a battleship around. The real issue in our view was, John, we could spend another hour on Disney. Chapek overspent on streaming. He basically was chasing subscribers, not profitability. It takes time to turn that around. They have to buy in Hulu. But I think what we would say, and I think it's fair criticism, is that the communication out of Disney since Bob has come back has been very poor, right? They basically have thrown out a ton of ideas and they've teased the market without delivering on what the story actually is going to be. Truth be told, the stock is trading where it is and there's very little long-only support right now, right? So I think the market has voted. And our call is, look, this is about 2024 fixing businesses that should be more profitable. But John, it's a fair comment. This ESPN issue, a lot of it was built on Bob talking about what he was going to do in the future, because Disney's not been aggressively leaking their content into streaming, like ESPN anyway. But he's been talking about, we're going to do this at some point. And I think Charter's management is, look, if you're going to do this, why are we paying for ESPN today?
I could do this for another hour too, Michael. I'm just been screamed at because I've got 5 seconds left on the clock.
Exactly.
Michael, thank you, buddy. Michael Nathanson of SVB, Moffett Nathanson.
From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more, but...
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from it.
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with 2 more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
We are seeing the turning point in global monetary policy.
We're staring down the barrel of what's probably a sluggish economy for quite some time.
The consumer really has taken on a lot this year.
You're seeing investors begin to entertain the idea that maybe a soft landing isn't a guarantee.
The Fed's job now is much more complicated.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance, Jonathan Farrell, Lisa Bramwitz, and talking all together again. How exciting. NASDAQ heading for a -1% to start the morning. A little bit moldy. Huge international news flow. We'll get to that. And John, in this hour on a fully employed America, maybe claims.
Yeah, a bit of tension in the economic data, some conflict, I think, between the beige book, which signaled a slowdown, maybe even a soft landing. You don't read it, Lisa did, I did too. And compare that with the ISM that came out yesterday, which was kind of boomy, pretty decent, quite strong. That pushed yields higher at the front end, the 2-year back above 5% on a 2-year yield, Tom, going into the Fed in a couple of weeks' time, which seemingly, at the moment at least, rate hikes are on ice.
Right now, we're Warren Buffetted by all sorts of international ideas here. You mentioned Germany flat on their back. We've got the Apple story we've been looking at all morning in China. But John, to me, Neela Richardson mentioning the complexities out there, I'm benumbed by it. I'm sort of surprised equities have held up a VIX of exactly 15.00.
Bit of a struggle this morning. You mentioned Apple. We should talk about it. Let's sit on that for a moment. The stock is down by about 2% this morning, trying to come back on my screen at the moment, down a little more than 1%, dancing around.
It's a correction.
TK, at the end of the day, it's a bit of weakness off the back of what may or may not happen in China. At the moment, what we do know, based on reporting from the Journal yesterday, from our team this morning, is that this ban at the state level is spreading from agency to agency and potentially to state firms as well. This is an important region for them. About a fifth of revenue comes from China, TK. Of course, for government iPhones, that's just a drop in the ocean. Dan Ives of Wedbush has talked about that. But as Lisa has mentioned, Tom, it's about the signaling, the optics, going into this launch next week for the iPhone 15.
But if you've bought back 120% of the stock over the last decade, as Apple does, I mean, this is an opportunity on a negative 10% correction, Lisa, to come in and buy back shares. I mean, that's a belief that Apple will do that among the Apple bulls.
You've been reading Dan Ives, and I think that he'd probably very much agree with you, and he would say, let's go.
Show me his research.
But then here is this sort of existential risk of, so it's a small drop in the bucket when it comes to government phones, but what does it mean when it comes to where Apple is going to try to do more of its manufacturing, how much it tries to immunize itself from China, what it means in terms of just broader decoupling, and what it means in terms of the growth trajectory for a company that got an upside surprise from their China business in the previous earnings report. It's important to keep noting that has been a point of strength for them.
In all that we've talked about this morning, and thank you for your emails, your tweets, the love you give John. I get nothing. But, John, I look at this, and I'm sorry, I'm waiting for the inflation reports in various countries, Germany included, Europe, I'm waiting.
13
I'm
for the
waiting
US.
for the U.S. inflation report, because maybe that's all that matters.
Elephant in the room. Shall I whisper it?
Yes.
$90 crude.
Don't tell the guard.
$90 crude.
That helps.
$90 Brent. That's the elephant in the room.
Gallon of
Just
gas
for anyone at home who didn't hear me whispering. I don't think you heard me either.
No, this mic doesn't work.
Yeah, $90 crude, Tom. That's the elephant in the room right now.
Yeah, it is. I mean, that's where we are. Let me do the data check, and I'm going to go right back to that. Brent crude 90.14. And John, the 10-year real yield 1.96%, elevated.
Nominal yield down about a basis point, TK. Let's call this 427, 426.98 in the FX market. More dollar strength. I've said it all morning. The euro clinging to 107. More weak data out of Europe right now at 107.06. Have we got some headlines on Ford? I think we have. Offering further improvements in the next contract. Nearly 8,000 UAW represented employees received a raise. UAW represented employees received a raise on Labor Day. Lisa, is it sufficient? Based on what we were talking about earlier this morning, the offer was 9%. They were looking for 40. Have we got a resolution?
Well, they are putting out the proposal, and we will see whether it is accepted by the UAW. What I'm interested in seeing is whether this provides the template for other auto manufacturers in Detroit. But this really is the question, especially ahead of, I believe, next week, the strike will go into effect if they don't come to some sort of resolution.
They have fast-tracked a pay boost, Tom, for 8,000 UAW employees over at Ford.
I don't know what to make of it, to be honest. I mean, this to me is it's like the Disney charter thing. It's hardball in a time of huge stress. What's the stress? Rates have changed. The real yield is real. And that's a change. And as Jeff Curry at Goldman Sachs suggests, it permeates energy. It permeates every other sector, including labor cost at big, complex companies.
Are these the dying fuse, dying embers of labor market power, or the start of something stickier?
I think
Ford, UPS,
we've got a yield structure back to 2006, and all of a sudden it's a new thing for everybody, including labor.
Yeah, going into 24.
I'll say this: we've got a very important guest here. Stop if you are in the stock market For Anastasia Amoroso, Chief Investment Strategist at iCapital, her deceptive charm is she says exactly what she thinks in her notes. It's lost in translation sometimes, but there it is, a single sentence. It's what everyone wants to talk about. You say, buy the dip in tech AI. Discuss.
Tom, this time I put it at the top of the note to make sure it didn't get lost at the bottom.
I only read the first paragraph of your notes. That's the words that
So I use as a headline, and I think investors should use the spike in yields that are denting technology to get back into those shares, and especially artificial intelligence. Because, Tom, if you think about long-term what drives shares, it's not so much, it's not valuations, it's not rates, but it's whether tech and stocks can deliver earnings growth, revenue growth. That's what long-term drives stocks. And so that's why I think investors would be smart to look through the near-term volatility and to enter this long-term, multi-year theme on any dips.
Tech is a broad story, of course, as you well know. Is this just AI, or is Apple a part of that story?
I mean, Apple certainly is a part of that story, but it is more cyclical versus secular. And, obviously there's an AI component to Apple as well. But, the type of tech companies that I think we should be focused on are the ones that are benefiting from this multi-year AI opportunity. So they have the secular tailwind, but at the same time, they're also benefiting from the cyclical upside as well. And again, I would squarely look to the AI beneficiary basket that I think you can find both of those.
Just to extrapolate out, though, what the longer-term implications are for other sectors outside of AI. Does this sort of decoupling and shift towards certain industries at the expense of others mean that we are going to have higher inflation or lower inflation, right? Does this boost some of these stocks, or is it just these stocks are going to grow independent of any sort of macro thesis just because of the boom in AI?
Well, if you think about inflation, and part of what's driving our inflation today is lack of labor supply. And if we are to solve that challenge, the great thing to do is to invest in artificial intelligence that has the potential to boost productivity. So I think as more and more, CFOs, CEOs, and also chief technology officers are kind of racing to boost their investments in artificial intelligence because they're trying to preserve their bottom line, I think that's what's ultimately going to provide a big boost for AI companies, because there's a bit of FOMO going on right now, and it's not in the stock market, but there's FOMO amongst IT managers that more and more of them want to make sure they're investing in AI, because if they don't and their competitors do, they will be left behind.
I'm trying to wrap my head around what the implications on a broader level are of companies investing more in AI, a number of these very specific ones doing very well, and then a whole bunch of industries doing terribly, really getting left out. And certainly with jobs that are not going to be available, cashiers getting put out of work, for example, according to the Bank of to recent U.S. data. What sectors are going to lose? That are you avoiding as AI does sort of reigns supreme?
Yeah, well, I think, anything that's related to, low margin sectors like retail, for example, that's not the space that I'm very interested in right now. But if you think about long term, if you are trying to boost margins, once again, maybe you do replace some of the labor that comes with higher wages. If you do replace that with, robotics, or you replace that with automation, that's the way to preserve those margins. But I would say near term, it's not an avoidance strategy. It's more of a preference strategy. Where do I think the incremental dollar spending of IT managers is going to go? It's on that specific theme. And that's why I say, rates bumps come and go, recession fears come and go, but this is a theme that managers are prioritizing for the coming years.
And may well accelerate. It makes you wonder whether some of these labor deals are the last kind of labor deals we'll ever see like this, given that acceleration into those kind of things that you're talking about.
Yeah, I think that would be a big call to make, to say these are the last of the labor deals. And the reason I say that is, all this tremendous artificial intelligence potentially we're talking about in automation, that's not going to happen in a blink of an eye. Obviously the adoption of ChatGPT, for example, seems like it did happen in the blink of an eye. We got to 100 million users in 2 months. But it does take time to, for example, install automation in a factory. It does take time, to make sure that AI is can go mainstream. So I think that time is years and not quarters, John.
You were saying that rate spikes come and go, and I'm just curious on the other side, yes, there's a preference for AI. The ballast, the sort of offset in your portfolio, can it still be a bond call at a time where there is such uncertainty, and your call on AI is sort of independent of that in a very strong way?
Yeah, it is. It's one of the things that we're going to continue to have the highest conviction in, but at the same time, it can be the only thing. And, I do think the other ballast to the portfolio has to be something that provides you protection against inflation being more sticky. And obviously, we have oil prices, John, you were whispering, spiking to $90.
Repeatedly.
$90 a
I'm
barrel.
pretty sure you heard it.
You caught that, huh?
Just barely.
Would you like to whisper into your mic right now? Buy tech and AI.
I think Tom is saying something about buying tech and AI.
Something actually creepy, that.
But I would also couple that with energy because, it's very clear that Saudi Arabia and Russia are intent on keeping oil prices elevated. And, if that's the case, that I want to be in that space as well.
Anastasia, thank you. This was wonderful. Anastasia Amoroso there of iCapital. Outspoken on growth, Tom, for a lot of this year.
Well, it's great. I didn't have a chance to talk to her on this, but Brian Belsky over at BMO Capital Markets now modeling 5,000 stole
Brian's
from other
bullish now.
bulls. Yeah.
Is he?
Yeah.
Wow.
Some of them are modeling out near 5,000 as well. Like Amoroso sounds like she's on.
Isn't Brian always bullish?
Well, that's
but Amoroso's like she's on the edge of 5,000 there.
Bullish and right. I like Brian. For what it's
he's
worth,
been bullish and right.
Bullish and right.
Yeah. But Anastasia I think is on the edge of 5,000. We're not hearing enough of this.
I'm not sure Anastasia said that.
No, she's not.
Anastasia's still right here.
We're getting a huge response, John.
You can whisper or not.
If you are just tuning in, welcome to the program. Whenever I say that, I always wonder if anyone's left. Equity futures on the S&P negative here by 0.4%. Coming up a little bit later on this morning, around about 18 minutes away, we'll catch up with Stephanie Roth-Tom of JP Morgan Private Bank.
It's going to be interesting to see huge opinions out there on our cruise surveillance. That's what we're naming it. We're modeling it right now. And the big decision, John, is do we go Caribbean as they say, or do we go not? I don't get the cruise ship in Venice, okay? Wicked against that. The big ugly cruise ship outside St. Mark's Square. But do you go with Cozumel and Coco Cay, thank you, Royal Caribbean, or do you go with Toronto and Otranto, which is Puglia? Like you can take the cruiser on the Italian coast, John.
Wasn't impressed with the accent on those names, but yes.
I nailed it?
You can go around.
What's going on?
The heel of Puglia.
We're trying
Tom, I wouldn't take a cruise ship to do that. You get a nice fancy yacht.
What time of year would you
That's what you would do.
What time of year would you do a Puglia cruise?
I think June's nice.
June?
Yeah,
I think we
early
can get
June
that
is
in
nice.
after Davos.
Can make early June work.
Yeah,
Sure.
On a cruise or on a special yacht?
On a yacht.
You guys are talking past each other. He's talking full,
Oh, no, we got to do a whole cruise. Hundreds will attend, John.
You're going to cruise on a yacht.
Hundreds will attend.
You want the all you can eat, all you can drink.
Yeah, the thing that's like 18 stories tall.
Where you get, sort of the shows
6
in the night.
pools. Yeah, you get
6 pools.
Yeah, there's 6 pools.
Oh,
in
like
these
a hotel
boats.
on a tanker. I hate that stuff.
I do too, but if they pay us, who cares?
They'd have to pay. How much would it cost?
Thousands. Think what we're worth on a cruise like that.
Real money.
25 people would show up.
To get me to do that, real money. Steve England of Standard Chartered coming up.
Anastasia should show up.
This June, in honor of Pride Month and Juneteenth, Bloomberg Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
Many of the indicators are now moving as we would expect them to move and are signaling that the fall in inflation will continue. And as I've said a number of times, I think will be quite marked by the end of this year. I think we are much nearer now to the top of the cycle.
So is he hiking or not hiking? Governor Bailey, the Bank of England, going into that decision on September 21st, a day after the Federal Reserve decision, Tom, a couple of weeks away today, and a week after the ECB, which is next Thursday.
I was sort of surprised by it. This is a guy that, he didn't say he wanted to declare victory, but what I would go to, John, I can't remember if we've brought this up the last couple of days, is how off the statisticians have been in the United Kingdom of gaming out UK real GDP. Basically, Governor Bailey's flying blind on a lot of the statistics.
He's not the only one.
Yeah.
He's not the only one.
I mean, it's a tough job.
Sure.
I don't think Powell's flying as blind as Bailey is about where are we right now. It's always hard.
Well, he's making a call on where he thinks we'll be at the end of the year, which is a much, much better inflation story to tell, based on what he said in those comments right there.
News flow extraordinary this morning, talking Apple, China. I've got, I'm out down to 0.9% down on 134 on NASDAQ. This just in, Anne-Marie will cruise with us in Puglia. She's all over it.
For one reason and one reason only.
Yeah,
there's a G7.
There's a whole G7 there, but we could do a G7 cruise, have everybody over for cocktails.
Okay.
Aperol spritzes. Is that what
On
they
a
drink
yacht.
there? What do they drink
on a yacht? You can get an Aperol spritz if that's what you'd like, sure.
You can get anything you want.
Thank you, Anne-Marie. We need 25 people to make this cruise happen, and we're down to 24 that we need.
It's a 25-person cruise.
Yeah, that's what Royal Caribbean says. You got to have a minimum 25 people to get the kind of suites, to get the rooms that we would want.
To get like credit at the casino. I hate that stuff.
They have casinos on board?
They have casinos on these
Do they have
boats.
Bloombergs on board? They probably have Bloomberg
They should have
terminals on
Bloomberg
board.
terminals
We'll have to have those
on board.
Look for that. The G7 meetings. Balance of power off the starboard rail.
That works. G7 next year.
Saving us here on equities, bonds, currencies, and commodities is a gentleman you need to listen to. If you're in equities, if you're in bonds, if you're in commodities, Stephen Englander is the definitive cross rates expert worldwide. He's never been out of a job. He holds court at Standard Chartered Bank and G10 FX. Stephen, I've got a seminar today I'm doing with Torsten Slok of Apollo and other worthies wrapped around U.S. dollar. Do you believe in dollar strength over the next 12 months?
Look, I think the momentum that it's had recently is impressive. But we know the factors that are driving it. Some robustness in the economy, weakness abroad, rates differential, primarily term premium, moving in the dollar's favor. I don't think that all of this will persist over the next year, but I think that the market is waiting to see a definitive turnaround of these factors before being comfortable selling the dollar again.
Right.
The momentum trade is clearly dollar positive at this point.
If America has a unique disinflation, how does the dollar change on a relative basis to other currencies? If we get American disinflation, how does that play into the dollar call?
Well, I think if we get disinflation with higher unemployment, it means lower rates. That's kind of what we expect. And we think that that would be enough to, even in this world, to have the dollar in a gently weakening slope. For the weakening to be pronounced, I think you need to see some signs of growth elsewhere. But I would say that from all the Fed comments, they're very skeptical about disinflation for free. So I don't think that they'll be comfortable saying, we've won. Unless they see some sign that the economy is responding. So, yes, if you get to 2% and there's no higher unemployment, the Fed will eventually ease. But I think they'll ease quicker if they see some signs that unemployment is picking up. And that would be the quickest path to dollar weakness.
Steve, let's tee up your favourite subject, and I'll tell you how much time we've got on the clock. Got about 4 minutes if you want it. Steve, do you think the labour market data is overstating the strength of the US labour market?
Right now, look, we thought QCW was going to had some risk of showing that it was much weaker than expected. That's a quarterly census, which is very accurate count of jobs. And, it showed some weakness, but mostly in Q4 of last year, nothing special in Q1 of this year. So right now, the data seem to be okay. But that said, the indications are that the labor market is slowing. What we suspect is the case is that claims are low, but that hiring is low as well. And we don't measure hiring. We don't have data on hiring in real time as we have on claims. So we're missing that aspect. But, that said, there's no ogre in the closet waiting to, give us a massive downward revision.
If that's the case, Steve, what we're seeing right now are lots of ogres in the closet when it comes to Europe. Each data print that we keep getting shows a worsening outlook. Why can't the euro keep falling versus the dollar in a significant way?
You have to think, everywhere where you see this kind of weakness, that there's bound to be a policy response. I think that the Europeans are going to have to dig themselves out. I think that they so far have dealt poorly with the shock from the Russia-Ukraine war, and secondarily with the shock from weaker Chinese demand. They sort of talk about fiscal policy. They talk about investing in green technology, doing their version of the Inflation Reduction Act, which is, to stimulate investment in these sectors. I think they have to do something like that to get things to turn around. The other part about Europe is we have to see that that the slowing in inflation is confirmed. In the data, there's some, but it's not as pronounced as it is in the United States and elsewhere. So they're reluctant to talk about more hikes, and we don't have a hike in the future, but the risks, I would say, are more on the upside than on the downside.
John, don't you think the irony of suddenly now going to fiscal policy and starting to spend when rates are at the highest levels going back more than a decade, it's sort of curious.
Isn't that the European way?
Is that what we're looking at right now?
You do the right thing late?
Well,
isn't that always the way?
Can I say that the U.S. is doing that?
Go ahead, Steve.
The Inflation Reduction Act is an entitlement for businesses to invest in green technology. It's sort of uncapped at this stage. And they're taking advantage of the incentives. The Europeans kind of are playing catch up on this.
Well, Steve, they don't seem to have a plan on that front, do they? What is their plan to respond to the IRA?
Well, it's always lagged by quite a bit. Eventually, they'll come up with something.
In like 5 years.
I would say that the room for the U.S. to have a fiscal response on if there's any weakness is very limited at this stage, given how bad the fiscal picture looks.
Too true. Steve, thank you, sir. Steve Englander there of Standard Chartered on Europe versus the United States, the policy front and what's happening in the FX market. I can tell you what's happening right now. The euro clinging to 107. We're getting so close to breaking that level. 107.02 is the low of the session. That low of the session, Tom, is right now.
We haven't done the technical work if it's a 106 handle, even a 105 handle where things give way, but there's some people really looking for a giveaway. I don't hear people talking parity. I've got a poll question that we'll have this afternoon with Torsten Slok and company, and the distribution of guesses on Euro, John, I'm not sure it includes hyper weak euro down to 1.00 or beneath.
If you wait a minute, Tom, we might break it. 107.01.
Yeah,
just seconds ago. Matt Hornbeck coming up in the next hour to talk about some of these issues of Morgan Stanley. Michael Schumacher of Wells Fargo. Why Mike thinks maybe the 10-year can get down to 350. We'll have a chat about that. We'll talk about tech with Emily Rowland of John Hancock Investments. All of that coming up a little bit later. We're going to lead with King Dollar. King Dollar is going to be the story we lead with a little bit later this morning.
But I would watch that. I think it's valid. And the one thing I look at here is, is Euro Swissy. And Euro Swissy hasn't given away strong Swiss. The fear isn't in the system that you would indicate was strong Swiss franc. It's just not there.
Those conversations starting in about 35 minutes or so. Good to have you back, TK.
Well,
I've missed you.
I'm looking at John. We got an ocean view for John. Lisa, you and I could be on the inside.
Nice.
We'll give Pharaoh the ocean view so he can wave to his family.
I appreciate that. Yeah,
we'll practice it.
It's the
family's
ocean.
still there. I might go stay with them. And
the royal.
Perhaps leave you on the boat.
The royal. I don't have my floaties
You'll swim
on.
off.
Might be the better option. Yeah.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
On radio and television, it is Bloomberg Surveillance. Me with a twisted bow tie. Come on, Lisa, you got to tell me. My bow tie's to port. You know, can't.
Well, you know,
there it is.
practicing
Lisa
for the
Brown's and
cruise.
Tom King. John Farrow on a deserved break. He's off booking our cruise surveillance off Puglia.
We haven't established what kind of boat this is going to be. Is
It's a
it going to
big-
be a
it's-
tanker or is it going to
It's
be
one,
a
it's
yacht?
one of the ugly ones that go into Venice and ruin the shores of Venice. We don't want to do that, but this is out
We'll ruin
more in
another
the
shore.
sea. No, we're out more in the sea, which is good. Right now, from sea to shining sea, we look at data, including important claims data. I'm befuddled. Michael McKee here to save the day. Michael?
Well, I'm not any less befuddled than you are because we're supposed to be seeing layoffs, at least according to the Fed. Initial jobless claims come in at 216,000 for the week ending September 2nd.
Lifeguards back to school?
That's down from 228, which was the original print. We'll see what the revision was. And take a look at this. Continuing claims, 1,679,000. That is down from 1,719,000. A huge drop in continuing claims. And continuing claims are perhaps more important right now because they're telling us how many people are actually out of work, and the number of people who are out of work and collecting benefits is falling, along with the number of people who are getting claims for the first time. So it's still a stunning number in the claims department. Quickly, non-farm productivity, 3.5%, down from 3.7. This is a revision to the second quarter. It's the final revision. Unit labor costs, 2.2%. That's up from 1.6%, but these are old numbers, so they have less utility to the Fed. I can't say utility.
Well, that's okay, Mike. You're getting ready for this afternoon. We'll go to Michael McKee in a moment. We do have a significant move in the market, Lisa, with the VIX out to 15.20, S&P in negative 26, NASDAQ down 1% full right now. And Lisa, the bond market really moves with higher yields coming off lower yields moments ago.
And the expectation here that strength in the labor market means that this economy can keep chugging along. The euro, we've been watching the euro cracking that 107 level, 106.95 versus the dollar, as you do see strength in the U.S. continue despite the weakness that we continue to see out of data in Europe.
I'm going to look at yen, which really hasn't moved, 147.47 on yen. If that was to break out to 148, that would really get my attention. And again, I watched Swissy, which hasn't moved. So there's not that global angst, but definitely there's a feeling there of Fed action to come. Brent crude stasis $90.20 a barrel. Michael McKee is our chief R-Star correspondent and joins us here in preparation for his conversation today with John Williams. Michael, cut to the chase. He's reaffirmed a return to lower R-Starred. Many people disagree with John Williams.
It's an interesting debate in the economic world, but I think the bottom line of the whole debate is that you don't know what R-Star is. So what he's talking about is a long-term return to lower interest rates, lower inflation environment. And if that's the case, then the question that follows is, what is monetary policy then? If he's wrong and the natural rate is higher, it means growth can be higher, then do we see the economy have to slow because the Fed keeps rates higher? Or do we go back to the 1990s when growth was strong, but inflation and Fed rates were higher?
And real rates were different there back to the 1990s. Right now, 1.99%. Like 2 basis points higher on the 10-year at real yield. Michael McKee, hugely anticipated conversation. You will see it this afternoon here at Bloomberg with the head of the New York Federal Reserve Bank. Right now, with changing markets, a brief from Stephanie Roth, senior markets economist, J.P. Morgan Private Bank. Good luck with this data. Feroli's going to age. He's going to get his first gray hair off of this, no question about it. How do you, within the continuum of J.P. Morgan, look at this American economy, given the shock I see on my screen, the 2-year yield, 5.03%?
Yeah, I mean, it's definitely a surprise. Claims just continue to move lower. Granted, there is some seasonality issues within the summer months, so it's possible we'll see a bit of a reversal of that when we head into September. If you look at the overall jobs picture, what we saw last week was kind of the opposite picture, and those are more a little bit less volatile data. So we saw quits rate continue to come down. That's now back down to where we were before the pandemic. You saw jobs. You know, the picture there, continue to see a rebalancing in the labor market. The 3-month average in non-farm payrolls is 150,000, which isn't that far from the break-even rate, especially if you factor in some of the immigration trends that we're seeing.
So you believe in immaculate cooling of the job market?
I think we're starting to see signs of that. It's pretty impressive. The extent to which you're seeing the job market continue to cool down, absent today's data, you're seeing wages continue to soften. The demand for labor does continue to cool down, and I think we'll just see more of this. It's been a pretty impressive cooling of the labor market throughout the course of this year. If you look at the beginning part of this year, job gains were double what they are today.
So do you believe that the Chicago Fed is correct when the new research paper dropped, where most of the effect from the 5.25 percentage points of increases that we've seen in rates going back some 18 months, that has mostly been percolating through the system, it's having its effect, and it can bring us down to 2% by mid-next year?
Yeah, if you look at inflation so far, it's come down quite a bit. Inflation, I would say, is trending around 3%. Their summer months also brought down the data, maybe artificially so we'll probably in the next couple months see it tick up a little bit. So I would say the trend in inflation right now is 3%. The Fed's not fighting 4.5% to 5% anymore.
Let me stay on the markets here. They are on the move here. John Farrow into the 9 o'clock on television. I'll be with Paul Sweeney here to get to the market. Opening NASDAQ futures negative 1.1%, in significant retreat, down 173 NASDAQ 100 points. We go from negative 26 to negative 29 now, and SPX down 0.7%. The VIX out to 15.33. Lisa, you mentioned the euro through 107. There it is, stronger dollar. I have a 105, Lisa, on DXY.
Yeah, this is a concern for Europe, how they deal with this, especially do they have to hike rates further? Regardless, U.S. has continued to be strong, and it does seem like the soft landing still is the preeminent issue that people are talking about in the U.S. What does that mean in terms of higher for longer and possibly not seeing rate cuts next year?
Yuan, 7.33 yuan is not where it was a couple days ago, so there's sort of a global follow-on here as well. What's your conviction? I mean, you've got such an eclectic team at JP Morgan. What is your conviction in your belief right now? Or do you feel like you could change it September 12th CPI, September 14th ECB? What's your belief in your theories?
So I feel good about the base case that we'll have this softish landing. Growth should probably slow in the first part of next year. But there are two tails. The one tail is that growth is better than expected in the next couple of months. And then you have the other tail where we get a more significant slowdown and the lags just take longer. And then that leads us to kind of a more material recession. So I feel good about the base case, but I think you're right. There is a lot of uncertainty around those tails.
Do you think that inflation can stay at 2% if the Fed starts aggressively cutting rates next year?
Yes, if they do it once they feel really good about the labor market cooling. So you probably need to see the unemployment rate rise a little bit more. So that 3.8% that we saw, that was largely driven by supply coming back online. In order for the Fed to really be cutting interest rates, you need to see a little bit more softness in that coming from a more material rise in unemployment.
What is that line in the sand? Is there one? Is it 4.5%, the target that they were looking at in terms of where they expected this year's unemployment rate to end?
I think it's a little bit, it could be a little bit lower than that, somewhere in between 4 and 4.5%, especially because back then inflation was a little bit higher. Now it's come down in a pretty significant way. So the importance of getting more material slowing in the economy is just a little bit less so.
We get some pre-market moves here now. Negative 30 on SPX gets my attention, but Apple, Lisa, sort of moldy all day, and now moldier. That's CFA talk.
Is it?
I got a negative 177, pre-market, down a solid 3.4%, and that's off a couple days of retreat.
Well, and it comes on the heels of headlines that China is banning the iPhone among certain government officials. But just tying that to the economic story is really important when it comes to what this means for ongoing trade tensions between the U.S. and China and how isolated the U.S. strength is from some of that. That, to me, is a big question mark.
I mean, a big question mark, Stephanie, is the heart of the matter here. And it comes to me, is the September meeting in play? The jargon here is Lisa reads the minutes, I don't. Is it a live meeting? Is it a live meeting?
I mean, of course, every meeting is live, but I think we're more talking about the November meeting is where we're really potentially talking about another hike. Even Waller was out, earlier this week. He sounded a lot more dovish than he's been. It seems like the desire is to pause and wait a little bit. What you saw in the base book was just signs that there's some softening in the labor market. It kind of makes sense to just wait a meeting and then see. Our base case is that they're done hiking, though.
Lisa, save me here. NASDAQ down 1.3%.
Well, just following on this discussion around China and what's going on, how isolated the U.S. and the strength there is Is there any knock-on effects that people aren't fully accounting for when it comes to, I don't want to say decoupling, what do they say, de-risking, however you want to phrase it, right, that we hear about between the U.S. and China? How do you model that?
I think the real transmission is that we're getting onshoring back to the U.S. economy, right? So production is now starting to pick up here. You're getting, semiconductor chip facility production is really strong. So the structures have been one of the reasons why the U.S. economy has been so resilient. So at the margin, it's been a support for the U.S. economy and the manufacturing sector. And I think we kind of forget that China's a little bit less relevant for the global economy than it used to be. It's not really the importer of goods, especially since it's not really boosting their property market, and it hasn't for years.
Well, but given that a lot of people say that the decades of disinflation and very low inflation were driven by globalization and by importing cheaper goods from overseas, does that reverse? And this is sort of underpinning some of the angst about higher yields for longer.
I think it would take, it's a really long story, right? And we still import a much larger share of goods from China than we used to. It has come down from 2018 levels, but it's still quite high, relatively speaking. And import goods, it's really a commodities channel. So to the extent that China impacts the global commodities chain, then that's really what goes into goods prices.
So what's your run rate on real GDP now? Atlanta GDP's got like a near 6%, 5.6% number. I know you don't believe in that, but what's the math to get us to the end of the year?
We're looking at about 3% or potentially even
3% higher. Really?
In 3Q and 4Q, you should probably see quite a bit weaker. A couple of headwinds heading into the fourth quarter. You have student debt payments, just some seasonal factors, and the momentum should be slower then. But Atlanta Fed is very much overstated, and they know the error in their model is very high at the beginning of the quarter.
Stephanie Roth with us with JP Morgan. Thank you so much, JP Morgan Bank, this morning. These are our markets on the move. Futures at negative 32.7%. NASDAQ won't give it up. We're going to be negative 200 on NASDAQ, 1.3% down. The VIX blows out almost a stick, 15.40 as well. Standard & Poor's 500 down 0.7%.
Right now, if you are just joining the program, we've been focusing on Apple all morning, and it's one thing that it's just a specific stock, one of the biggest inputs, of course, into the NASDAQ, but also, Tom, just what the larger question is here for the growth story. And I think that was some of the angst that we heard from Seema Shah. Yeah, she was overweight, but she wasn't adding to that position in big tech on the heels of some of the
Anastasia Amoroso went completely the other way. And, that's what makes the show go here is we got a lot of good opinions, but Amoroso saying buy the tech AI dip. I'm not going to do that out of triple leveraged all cash, but there it is.
This is underpinning a lot of the bigger moves on the macro front too. And I think about the euro and how it's gone below 107. How much is this tech story what's underpinned the U.S. story of growth and sort of the U.S. story of continuing to increase and decouple in terms of strength versus the rest of the world? How long can that continue? And I think that's sort of being thrown into focus, especially ahead of G20.
Isn't September supposed to be, as Neela Richardson said, complex? September's always ugly. It's like
it's bad because we're trying to get our kids back to school.
No, well, there's that. How about school supplies? When did this racket start?
Yeah, well, it's textbooks. In college, that was really the key racket. I'm sorry, that to me, those textbooks, they're like $150 each.
Yeah.
Ridiculous. What kind of school supplies are you getting for your...
I don't know. She's taking physics. She needs a scale. She needs a scale that weighs atomic weight or whatever. And,
What kind of scale did you get her? And did she actually need it, or was it something that you thought was cool? Let's be honest.
Her first paper's on the physics of Nutella. That's what she's doing.
I don't want to know the physics of Nutella because I serve it to my children, so I don't want to understand that.
Lots going on. Stay with us with the VIX up a full point, 15.47. Daniel Tenenbaum, next.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
China is one of the most important economies in the world and is not a country that anyone can simply ignore. We have to be eyes wide open as we engage. We have to look for where we're going to compete, where we're going to be very clear and contest based on our values, based on principles that Canadians expect us to adhere to. But we also need to look at where we actually can cooperate and work together.
That was Justin Trudeau, Prime Minister of Canada, speaking with our own Eric Schatzker moments ago as he get the lead-in, the warm-up act, I should say, to the G20 meetings in New Delhi, which start in just a couple of days. President Biden will be on his way there later today. Right now, I just want to rehash some of the stories we've been talking about all morning. And Tom, I just think that Apple is the #1 story, really, of the morning, not just because it has been leading some of the declines in the NASDAQ and beyond, but also just because we are looking at the potential for Apple to get entrenched in the U.S.-China concerns. And what happens if China goes after Apple in a more material way? What does that mean in terms of the friendliness, the openness to international businesses?
Or is it an opportunity here? Let's call it a 10% correction. We're -8, and now we're more than -8, to say the least. Do the math. And the answer is, I guess this is supposed to happen and pulls back, and the bulls have an opportunity to get resilient into the product announcements of the 12th. I don't have a clue what they're going to say. I just read Gurman like everybody else. But the answer is this a tech AI opportunity, as Anastasia Amoroso was rudely pounding the table on hours ago?
Apple shares down 3.6%. NVIDIA on the AI front. And yes, Anastasia was talking about how important it was to just believe in the long-term thesis. NVIDIA perhaps more directly tied to it, buying into weakness. The weakness down 2.6% right now. There was a couple of companies pointing to some potential softness. C3.ai said that profit will be delayed from some of their AI interface. That was yesterday. So I wonder how much people are really gut checking it or just sort of taking some chips off the table.
Well, I will have to see. I just think it's, it's a good September trauma here in the markets. The VIX up a stick. 15.51. The VIX is starting to move. There's no question about that. Are we done with the stock report?
Well, I was going to mention Ford, but
mention
just
Ford
quickly.
and mention the euro. I mean, the euro breaking down 107 to me is a big deal. It's not a stock.
I was about to say not exactly a
It's
stock,
not a stock,
but we can create a stock
euro
for it.
106.91.
Just quickly, the whole concept of unions. Ford says that it is going to offer up some additional pay to employees. This comes ahead of an ongoing tussle with UAW. The question will be, will it be enough if they're getting about $9,000 additionally per year with overtime? That is going to be.
Our guests have been great here, and particularly through a tumultuous August, and it was wonderful. We couldn't get Tannenbaum in earlier because he's got like six summer retreats he goes to. I mean, he handles it from Bar Harbor all the way down to,
He's sitting right here. You can ask him all about it.
Well, he does. I mean, we couldn't get him in August. Finally, here in September, Daniel Tannenbaum joins his partner, global anti-financial crime practice leader at Oliver Wyman, about the sum of all our fears. How do you interpret the media frenzy and lots of non-experts acting like experts about stuff you're expert in.
I mean, that's not out of sync with how things have worked for quite a while anyway. But I mean, speaking of tussles, I mean, some of the reactions you're seeing out of China, I mean, let's remember, China has had somewhat of a muted response to years of Trump aggression. They never really reacted to that. They've only really begun reacting in kind, whether it was paying visits with national security officials to a variety of American businesses, beginning to ban access to certain commodities, now potentially banning certain devices within Chinese government offices. I think we're now finding ourselves kind of in a true tit for tat that we hadn't seen before. And I think the government is still calibrating how to respond, because we've had a lot of visits of U.S. government officials to China over the last few weeks and months to really try and instill business confidence, and moves like what's happened this week do precisely the opposite.
The tea leaf that I follow is foreign direct investment into China. You are hardwired to this debate with the clients of Oliver Wyman. Are corporations going to pull back, or is it a figment of our 2023 imagination?
Right now, the question I get from clients, that we get from clients more often than not, is what is everyone else doing with China? So like everyone's kind of looking around to make sure they're not out of sync. I don't see any pullback. You've already seen some companies begin to, and following kind of Janet Yellen's remarks, de-risk their supply chain, look to diversify. That's really where India has a potential opportunity on the heels of the G20 of trying to encourage more investment in manufacturing within India, obviously taking advantage of some of the challenges in China. But I think most of my clients are really looking to understand where they're potentially exposed. They may not be deepening any relationships, but they're also not pulling back.
Well, this is a compelling point. It's something that Leland Miller talked about. You just have to reframe where you see the growth opportunity in China. They're not pulling back yet. Does this up the ante, though? Did you get some frantic phone calls this morning from your retreats, wherever they may be, saying, you know, does this change the dial if they're willing to go after Apple, which employs millions of Chinese?
I didn't get any calls on this yet today, although it's been, it's early yet. I certainly got a lot of calls on the outbound CFIUS executive order, and there's a lot of questions. There's an industry comment period that's been proposed to really look at where potential investment into China may be heavily restricted by the U.S., but there's a lot of questions on what that looks like. So it's certainly halting some investment, but it's not basically forcing a preemptive divestment.
And just when you talk about tit for tat and in foreign investment, this data came out this morning that I thought was interesting, that the value of completed Chinese foreign direct investment transactions in the U.S. was about $2.5 billion last year. That was less than half the amount back in 2009. So this, or 2021, it was the smallest since 2009. We're looking at already something that's percolating. Do you think that the companies that you speak to fully appreciate how quickly it's moving right now?
No, I don't. And again, you see actions like what happened this week on banning certain technology devices that weren't necessarily on anyone's radar. I think right now everyone's trying to keep their ear to the ground and try and react and assess their kind of risks and exposure as rapidly as possible. That's about the best you can do at the moment, which is really try and see, where do I have the biggest potential challenges based on where China's going, based on where the U.S. is going from a restriction standpoint, and how do we not get caught in the middle, which is obviously the last thing companies want, is to be ground zero for some of these issues, like some banks have been over the last few years, frankly.
To shift to Europe, in Ukraine, in the war in Ukraine, the Indian relationship with Russia was complex, almost mystical. Is India our ally? Is India Ukraine's ally or not?
Yes. I think India is walking an interesting line that'll come to a head this weekend. They obviously have a prominent role in BRICS, but they're obviously hosting G20. They're trying to increase foreign investment in their country to take advantage of some of the challenges that China's seeing. And they've been taking advantage of Russia's predicament economically and buying cheap oil to further their own ambitions. I do think, and again, the U.S. has been somewhat reluctant, as have its allies, to force countries to choose a side. But I do think you're seeing the U.S. push more military cooperation with India, which it never had previously. India previously bought most of its arms from Russian suppliers. Now the U.S. is looking to try and diversify as an enticement to bring them really into the warm hug of the West's kind of side more actively.
Is this the reason why we're seeing a solidification with the potential meeting between Russia and North Korea and the leaders of those two nations, that we're seeing a sort of solidification in other areas?
I mean, Russia turning to North Korea, they're not turning to North Korea for advanced weaponry. They're turning to it for basic munitions. And I am not a military expert, nor will I pretend to be ringing endorsement for how well things are going. I do think India has an opportunity now to potentially play a much larger role in the global economy, but it is walking that line. It hasn't actively spoken out against the conflict in Ukraine. It's still buying Russian oil. It's still trying to benefit from its relationship from the U.S. and be the leader of the global South. You can only take that so far.
Dan, thanks for the brief. Don't be a stranger. It's going to be a wild September, to say the least. Mr. Tannenbaum is with Oliver Wyman, truly expert on sanctions. There will be an interview this afternoon, Michael McKee with John Williams. I don't know if they'll do a market check for you at 3:30 p.m. into the close. But nevertheless, we need a market check right now. Lisa, markets deteriorate.
And you could see that in stronger dollar, and you could see that in yields. Two-year yields now crossing the 5% line yet again after closing there yesterday. Yields higher as they game out potentially a still strong labor market.
The NASDAQ down 1.3%. Again, that's some of the Apple outflow in the coming days. Pay attention to Mark Gurman of Bloomberg News, not only on Apple Now in China, but Apple to their confab on September 12th. On radio, on television, this is Bloomberg Surveillance.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Keeping the faith in billionaire Warren Buffett. The legendary investor turns 93 this August. His signature must-read letters to shareholders have been getting shorter and shorter. This year's letter contained few fresh ideas. But most investors in a Bloomberg survey say Buffett's steady Eddie approach of buying cheap, safe, high-quality companies will beat the market. They expect returns in his investment company, Berkshire Hathaway, to outperform the S&P 500 over the next 5 years, adding to an incredible run in which Berkshire shares have returned more than 3 million% in the almost 6 decades Buffett has led the firm. Investors are also willing to pay up for Berkshire, which owns everything from the railroad BNSF and car insurer Geico to See's Candies and Coca-Cola. About 1/5 quantify the Buffett premium at more than 10% of Berkshire's stock price. More than a quarter say it's somewhere between 5 to 10%. There is one problem for Berkshire Hathaway, its size. Thanks to a bunch of cash-generating insurance companies, Berkshire has at least $130 billion in cash that it can put to work. But it needs big acquisitions to move the needle. Buffett calls it hunting for elephants. And we know Buffett hates overpaying. So that means sitting tight, patiently waiting for the right moment to pounce on the right company, which might be a drag on performance for now, but as Buffett fans know, usually works out in the long run.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present it with a plan.
This is Bloomberg.
Equity session lows, live from New York City this morning. Good morning, good morning. We're down 0.75% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, the UAW said to be planning a counter-offer to Ford, China looking to broaden its iPhone ban to state firms, and Biden to cancel Arctic drilling rights sold by Trump. We begin with the big issue, King Dollar.
You've got a strong dollar story.
Strong dollar.
Stronger dollar.
The US economy continues to plough forward pretty strongly.
Continues to do well. Dollar strength is about a lot more than just the US story.
Really is a reflection of the yield differentials across the globe.
Activity elsewhere in the global economy is slipping.
On the back of some disappointing data from the euro area.
It's also very much the case in China.
The Fed is, with its rate differential, keeping the dollar aloft.
If the Fed does eventually cut rates in 2024...
If we get some relief on inflation, for the Fed to back off a little bit.
You do have the basis then for a somewhat weaker dollar.
For the dollar to come down.
If the Fed is going to start again, I think we're going to get a significantly stronger dollar in the next leg.
More dollar strength.
King dollar is going to be king dollar.
We're seeing certainly a return over the last couple of months of US exceptionalism.
To discuss, Matt Hornback, Morgan Stanley, Mike Schumacher, Wells Fargo. Matt Hornback, the euro against the dollar, 106.95. Matt, for you, what underpins this dollar move and how sustainable do you think it is?
Well, John, thanks for having me. And I think your opening bit there covered quite a lot of the issues at play. We definitely have a combination of global growth weakening, particularly in Europe, followed by China. And then we've got what appears to be resilience in the U.S. economy. So that has allowed interest rate markets in the U.S. to keep hope alive for another 25 basis point rate hike from the Fed. And I do think the rate differential story does benefit the U.S. dollar, particularly when you look at real interest rates in the U.S. pressing up against fresh highs.
Matt, do you think that resilience in the U.S. data is somewhat overstated?
Well, and it also depends on what you're looking at. You know, if you look at claims this morning, obviously there was some hurricane effect in the state of Florida, but if you look at claims, you'd think the economy is on fire. If you look at the downward revision to hours worked in the second quarter productivity report, you might think something differently is going on in the labor market. So it's really in the eye of the beholder, and it depends on what data set you're looking at.
Mike, there's a bit of conflict here, isn't there? Yesterday, a perfect example of that. The beige book says soft landing to some extent. The ISM said no landing at all. How much weight would you put on one data point versus the other?
Pretty little, frankly, John. You've got to look at the broader story here. So labor market, weaker than it had been, but still strong. Growth tipping a bit, but generally speaking, I'd say I wouldn't attach a lot of weight to any particular data point. And when you think about market movers, Beige Book, frankly, and ISM even, don't really stack up in general. So we're not terribly concerned about either of those prints.
Well, Mike, you've got a big call. Go big or go home. We expect the 10-year Treasury to end the year around 350. So let's go big right now. Your 10-year, 428. What's taking us to 350?
Yeah, a couple of things. So first off, and Matt mentioned this, real yields are very high in the U.S. There's no escaping that, John. And really, when you've got the 10-year plus or minus 2%, that's attractive to lots of types of investors, whether it's big institutions, even the retail folks. They can't really miss that. The second thing, which we think is more important, and I think it's really a critical point for anyone listening to the show at this point, is that the Fed and the big central banks, they're about done tightening. Does the Fed go one more time? Maybe. Does it matter a lot? Not to most people. The big story here is when central banks finish tightening, and the Fed included, you generally get a very strong rally in bonds. And people say, well, the cycle's different. Could it be different? Sure, it could be, but I would argue that the move is probably at least as intense as we have had historically. So that sets the stage for a pretty big rally intense toward the end of the year.
Matt Hornback, can you get on board with that?
Yeah, John, and our current forecasts are currently at 3.5% at the end of the year as well. So we do attach a lot of weight to this idea that the bond market can stage a pretty meaningful rally into the end of the year. And look, one of the big drivers for us is what has been going on with fiscal policy. We've had a tremendous amount of support to economic activity over the past year, with a 5 percentage point of GDP increase in the fiscal deficit. I know a lot of people poo-poo that, but I mean, that is a massive increase in the fiscal deficit that had to have provided a tremendous amount of support to activity, and that's fading, John, really starting now over the course of the next 12 months.
So, Matt, you've also mentioned as well in your research over at Morgan Stanley the resumption of student loan repayments as well. We know there's a 12-month on-ramp, so to speak, for those repayments. Why do you think that might begin to hit to bite this economy later on this year?
Well, look, I mean, we know that people have been dipping into those excess savings that built up during the height of the pandemic period, and we know that those excess savings have been drawn down a decent amount. You know, there's different opinions on that, but generally speaking, people have been dipping into savings. They've been tapping credit card balances to support their spending, and we're seeing evidence that demand for labor is softening while more people are going back into the labor force to try to get work. And that ultimately does speak to the need for more income. And so, yeah, at the end of the day, if you don't have a lot of savings and you're going to have to start making student loan repayments, you're going to need to find another job. And that speaks to us to be more weakness in demand and more supply, which means wages are going to come down, John.
And yet with that, Matt, at the same time, we've still got a 10-year near cycle highs, 436, that cycle high, the 10-year right now, 427. We've still got crude near the highs for the year. Matt, a favourite question of mine at the moment is whether those moves reflect an extension of the cycle or whether you believe that's a recipe to end it. Do you lean into the latter and not the former then?
Well, I mean, this is what markets do, John. Markets can overshoot. They can run with themes or narratives for too long, and ultimately that sows the seeds of the next leg of the cycle. Which, yes, so this tightening in financial conditions coming through oil, coming through the equity market, coming through the U.S. dollar, coming through U.S. interest rates. Yes, this tightening in financial conditions will end up showing up in the data, no doubt.
Crude, a little bit softer here. We're down 1/3 on Brent crude, $90 and about 25 cents. On WTI, $87 and about 13 cents. Economic data behind us, in front of us, a ton of Fed speed. With more, let's get to Mike McKee. Morning, Mike.
Good morning, John. Well, we did have some surprising data again today. Jobless claims not doing what you'd think they'd do if the Fed is raising rates and slowing the economy. Take a look. We're not only back to where we were pre-pandemic, and I cut the pandemic out because it throws the chart off so much, but the jobless claims numbers and the continuing claims numbers are still falling. 216,000 for claims, 1,679,000 for continuing claims. This is still a tight labor market. Does that mean that the Fed should be raising rates? Well, we will hear from a lot of Fed officials today, but take a look at yesterday's beige book as perhaps a guide to what they might be thinking. What you're seeing here is references to the word slow or slowdown and references to the word recession increasing significantly over the past couple of beige books. Now people are beginning to talk about the economy slowing down. CEOs telling the Fed, various Feds around the country, that we may be at the end of consumer spending. And then you were talking about the dollar. I thought I'd throw this in here. The Fed has to worry about it. They won't talk about it in terms of its value, but they do have to worry about it. And here's why: because when the dollar gets stronger, it hurts imports. It hurts our exports, but it helps import prices. We should see import prices go down, but look what happens on the bottom scale there. When the dollar gets stronger, it tends to push up interest rates in the U.S. So the Fed has sort of a good news, bad news situation when the dollar is getting stronger. So something for them to keep an eye on, and of course, we will be talking to somebody about that this afternoon. If only there was a Fed leader we could ask about all this.
Well, Mike McKee, we'll put up the promo right now for you. We've got the graphic ready. I'll go through the Fed speak while we do that. Harker, Goolsbee, Bostic, Bowman, Logan, all today, and John Williams, the New York Fed president. Can you give us a sneak peek, Mike? What's the conversation going to be like later on this afternoon?
Well, obviously you have to ask if they're going to go another time or not. But then the question becomes, as the gentleman you're talking to, Michael and Matthew, are talking about, what happens after that? Does the Fed start cutting? because they see recession? Do they start cutting because they want to keep real rates from rising too far? Or do they just hold because they need to continue at a high level to stamp out inflation? A lot of ways the Fed can go, and we'll talk to the vice chair of the Open Market Committee about which way he thinks they should go.
We'll take that live and in full right here at Bloomberg on TV and radio. Mike McKee, thanks for that. Matt Hornback, Mike Schumacher still with us. Mike Schumacher, first to you, sir. What would you like to hear from John Williams a little bit later on this afternoon?
What I'd like to hear is John to say, hey, Mike, that's a great call, 350 on 10s. We can make that happen for you. But I think a little more realistically, I think he's going to say basic platitudes. Hey, we've done a lot of good work, a lot of tightening still in the pipeline. The economy is going to feel the effects of very high real rates. We talked about this a bit already, but think about real Fed funds bumping up after CPI next week. It's going to look close to 3%, which is pretty wild. So I suspect John Williams will say something along the lines of, hey, we could consider easing next year if reals are still very, very high. Something in that vein. He's made comments like that recently.
All this Fed speak going into the quiet period, which commences this weekend, then going into next week, it's all about CPI on the 13th of September. Matt, there's a sense that no matter what we hear today, rate hikes are on ice in September. Are you on the same side as that? Have we seen the last hike from the perspective of you and the team at Morgan Stanley?
Yeah, so Ellen Zentner, our chief U.S. economist, thinks the Fed is done hiking rates, and on the strategy side, we see it the same way. The markets are mostly there, but the real debate amongst investors is whether the Fed goes again later this year, whether it's November or December. The market is attaching a relatively high probability to another rate hike. And I think part of that links to what some people are forecasting as a rebound in core inflation in the U.S. So that's where the rubber meets the road is, does inflation continue to soften into the end of the year, or do we get a rebound? And then what does the Fed do with that?
Matt Hornback, Mike Schumacher, going to stick with us. We'll build on this conversation in just a moment. Going into the opening bell about 20 minutes away, equity futures are negative here by 0.75% on the S&P 500. Apple at the epicenter of the move in the last couple of days. Let's get you some movers. Here's Abby.
Apple is absolutely at the epicenter of this three-day decline, especially yesterday. Apple was down nearly 4%. In the pre-market, a similar move lower, John, so down about 7% over 2 days. That China ban on the iPhone has extended to, as you were mentioning earlier, government-backed agencies and state companies. Now, China is about 19% of their revenue. Wedbush is saying this is overblown, but technically this stock is breaking down and is likely to continue to weigh on the major indexes with its big weighting. NVIDIA down 3.2%. September is a challenging month for this company. Last year down about 20%, the year before that down 7.5%. Right now into today down 5%. So NVIDIA currently, a September to remember, down about 8%. And then C3 AI, well, it's not getting any better. The AI hype, it's not living up to the hype. The results not living up to the hype. Their revenue forecast was a little bit light. Profitability will take longer than expected. John, the stock, as you know, into this session up 181% on the year. Price for perfection, investors simply not getting it.
Abby, thank you. More from Abby around the opening bell in about 20 minutes' time. Coming up on this program, President Biden taking a labor deal victory lap.
This contract proves that collective bargaining works. It gives workers a seat at the table and ensures that their well-being, security, and futures are a priority.
This is nearly 8,000 UAW employees at Ford receive a pay boost. Negotiations continue with GM. Team coverage up next.
thought maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep rating World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
This landmark contract covers 29 ports, stretching from San Diego, California to Bellingham, Washington, that play a major role in our nation's economy. More comes through those ports than any other means of getting into the United States of America. It's gigantic economic impact. This contract proves that collective bargaining works. It gives workers a seat at the table and ensures that their well-being, security, and futures are a priority.
President Biden speaking from the White House, taking a bit of a victory lap on a labor deal for dock workers as negotiations continue in Detroit. Ford saying it fast-tracked a pay boost for 8,000 UAW employees as of Labor Day. This after the union made a counteroffer ahead of next week's strike deadline. Let's get your team coverage. Bloomberg's AMH alongside Kelly Lyons in Washington, D.C. Kelly Lyons, what's the latest?
Well, I would point out that this raise for these 8,000 union represented workers at Ford is a product of something that was agreed to back in 2019. That is when those negotiations happened. It's just accelerating now the time it takes for a worker to reach the average top raise of $32 an hour. And Ford said in a statement that these pay raises are an example of Ford's commitment to improving the lives of our hourly workforce. And we are offering further improvements in the next contract because, of course, John, it is now the next contract that is of issue here. The current one expires on September 14th, and so we are staring down that deadline for these negotiations to actually result in a deal. And of course, this isn't just Ford. GM and Stellantis are also locked in these conversations with the UAW. And if you remember, just last week, the UAW filed a lawsuit against those two car companies saying that they weren't bargaining in good faith. Now, the latest there is we do expect that GM and the UAW are going to talk today. The union has said it does expect to get an offer from GM. Then for Stellantis, they are expected to present an offer by the end of this week. But time is running short. We are just a week out now from that contract expiration. Remember, the union itself has called some of what it is asking for audacious: 46% pay raises, 32-hour work week, other benefit related matters as well. And GM has been here before. In 2019, there was a 40-day strike of that automaker in particular that cost the company billions of dollars in EBITDA. So this is really go time here, John. 150,000 workers risking walking out of all three automakers at the same time if an agreement can't be made.
It is go time, Anne-Marie. What's the official line from this White House on this dispute?
Well, you saw it out in the open yesterday, Jonathan. This White House wants to be seen as they are on the side of the unions, especially when they come out hailing the product of what happened between the dock workers in the Pacific and on the ports. But overshadowing that, of course, is this contentious contract debate between the UAW, as Kayleigh just outlined, and these big three auto workers. And it puts Biden in a really difficult place. We already know that there's an individual in the White House that has been working with this, Gene Sperling. He wanted someone to make sure they were involved in these negotiations. There's a lot of consternation within the White House. One, the president doesn't want to see a strike on his watch. What does that mean for the supply chain? What does that mean for the impact on the economy? But also, at the heart of these negotiations negotiations, Jonathan, is a pivotal industrial policy that this administration wants to see through, and that goes to electrifying the EV grid. And what you hear from the UAE workers is they want to know if they're not going to be left behind in this EV push. A lot of these battery plants are being developed in the south of America that usually doesn't have a pro-labor union way of working, it just historically. And second, of course, is the fact that they want to make sure that these workers that are working on EVs, that they're coming into the UAW, that they can look at their wages and make sure they're benefiting on behalf of them. So it's a really sticky situation for the president, and that's probably part of the reason why the UAW has yet to endorse his re-election campaign.
AMH, thank you. Anne-Marie, alongside Kelly Lyons down in Washington, Matt Hornback. Mike Schumacher back with us. Matt Hornback, are these the dying embers of a hot labour market or a new regime for labour power?
Well, John, I mean, when we look at what's going on in the supply demand in the labor market, we can see clear trends have been developing for quite some time. And I don't think that these labor negotiations are going to change the macro picture here, which is that the demand for labor is softening. It's every time we get a new labor market report, there are backward revisions downward. And so we know that demand for labor is softening. We also know that supply of labor is increasing. We're seeing it in the participation rate. We're seeing it in the immigration statistics. So we have clear signs that the supply-demand imbalance is becoming better balanced, and that should result in lower wage growth for the labor market as a whole.
Mike, for a man who thinks 10-year yields go down to 350, I assume you're on the same page as Matt on this one.
Yeah, sort of, John, but I take it a little bit differently in the sense that we have is that when you have I agree the labor market's weakening, that does support our call, but as far as a longer-term union negotiation, to some degree that entrenches inflation at a somewhat higher level than it otherwise would be. So where I'm going with this is, what do you think about that if you're John Williams? We talked about him, or Jay Powell. This means that equilibrium level of inflation is probably a little bit higher than they would have anticipated previously. And I think that's what all the Fed officials and ECB folks are struggling with. Where does inflation finally go? So it doesn't really hurt our bullish case, but it does make you wonder where exactly is that final resting spot, if you will, for inflation in the U.S.
It certainly complicates that bullish case to some extent, Mike. When you start to think about where rates would settle down some point in the future when this is all said and done, what are you thinking about, the long-term rates in the United States?
Yeah, I'd break it down pretty simply, John, and say, all right, real yield, what do we think? Maybe 75 basis points, something like that. Steady state inflation, low twos, gets us to 3, maybe 3.25-ish on the 10-year long run. Now, long run could be quite a while from now, but is that really helped by something like the UAW? No. Does the UAW case really crush the argument for a big rally in 10s? Not at all. But I think when you focus on the dynamics out a number of years, that's how we look at it at Wells Fargo.
Mike Schumacher, Wells Fargo, Matt Hornback, Morgan Stanley. To the both of you, thank you. Looking for 3.5% on a 10-year yield by year end. Right now, the 10-year 4.28. Coming up, the morning calls, and later, Apple on track to wipe out nearly $200 billion in market value in just 2 sessions. We're down this morning by 3.9%. That conversation still ahead with John Hancock's Emily Rowland. Your equity market on the S&P 500 session lows at negative 0.8%. From New York, good morning.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. and they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The two-day losing streak on the S&P is about to become 3, about 5 minutes away from the opening bell. Equity futures pulling back 0.75% on the S&P 500. On the Nasdaq, we're negative by 1.3%. Remember the weightings here. Apple at the epicenter of this. Apple lower right now by 3.9% in the pre-market off the back of our report today this morning. China's iPhone ban set to spread across agencies and maybe towards state firms as well. So Apple lower, 11% of the Nasdaq 100, 7% of the S&P, explaining that equity pullback. In the bond market, let's look at treasuries together. Some conflicting data. Beige Book says slow down. ISM and claims say what slowed down. Two-year yield still in and around 5% at 4.99. That's the price action. Let's get you some morning calls. First up, Wells Fargo upgrading McDonald's to overweight, 310 price target, saying the company is poised to benefit from digital initiatives. Your second call from Loop Capital downgrading Roku to hold, seeing little room for error given the stock's rich valuation. And finally, Barclays downgrading Dow to underweight, $53 price target, expecting macro headwinds to weigh on the PC market. That stock is negative 1.8%. Coming up, Apple poised to shed nearly $200 billion in market cap as China is set to broaden its iPhone ban. John Hancock's Emily Rowland joins us at the opening bell, making a case for getting defensive. That opening bell just around the corner.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
Welcome to the world of DC. decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Three seconds away from the opening bout this morning. Good morning to you. Two-day losing streak coming into Thursday. Based on this, it could well become three. Your equity market negative 0.75% on the S&P 500. On the Nasdaq, down a little more than 1%. With one stock to blame for some of this, maybe a lot of this, it's Apple. There's your opening bout. Switch on the board and get to the bond market. 3 days of yields climbing into Thursday. This Thursday morning, we pulled back by a single basis point. Your 10-year 4.2698. Jobless claims lower than expected. The right kind of downside surprise for the Federal Reserve trying to engineer a labour market slowdown. Maybe the wrong kind of downside surprise. You'll hear from tons of Fed speakers through today. In the FX market, dollar stronger, euro weaker. Data out of Europe just absolutely terrible. A break of 107 in the last hour, 106.96. At the moment, we're negative by a third of 1% on that currency pair. And crude, near new highs for the year, pulling back just a touch. We're down 0.4% on WTI, $87 and about 17 cents. 37 seconds into this session, we pulled back by 0.75% on the S&P, by more than 1% on the Nasdaq. Want to play the blame game? Here's one. Apple, China, planning to expand its ban on iPhones, prohibiting certain government-backed agencies and state companies from using the devices. Ed Ludlow has more. Morning, Ed.
Good morning, Jonathan. Apple is down more than 4%. As you can see, that equates to $122 billion of market cap shed. I should say it's on track for its biggest drop in a month. What we are reporting at Bloomberg is an extension of what the Wall Street Journal reported 24 hours ago. They had said, citing anonymous sources, that some central government agencies had told staff that to leave their iPhones at home and other foreign handsets. Our understanding from Bloomberg sources is that there is a consideration this is extended to a broader range of government agencies, but also state-backed enterprises as well. You will remember, Jonathan, you and I 24 hours ago talked about the May edict from the Chinese government for personal computers. In May of 2022, the Chinese government made a very similar decree that a wide range of government agencies and state-backed corporations had to, within a term limit, switch from foreign brand PCs to domestic brand PCs. This is really critically important. Stocks now down 4.8%. Go back to the earnings call in August 3rd. What they had told us is that in China, it was a June quarter record for sales. In the June quarter in China, Apple had swung to revenue growth of 8% from a decline of 3% the prior quarter. But the language was so specific. From Luca Maestri, the CFO, it was that they'd see continued growth in the Greater China region. And Tim Cook said the biggest driver of growth in that market in Greater China was switchers, people that were switching to iPhone for the first time. Remember, guidance for the current period is that sales would be in line with the past quarter, in other words, a small decline. 4 straight quarters of declines would be the longest streak going back 2 decades. So my point here is that based on that narrative from the earnings call, if there's a serious government action in China on the iPhone, that muddies significantly the guidance that we were given on the call, because China was the bright spot.
The stock is down by close to 5%, worst day potentially going back to May of this year. This is the bullish outlook on things, Ed, and I'll share more of the quote from Dan Ives of Wedbush in just a moment. But he says this morning: the recent China news over the last few days, we believe, is a worst-case scenario. Any China government agency iPhone ban is way overblown. As to quantify, it's less than 500,000 iPhones of roughly 45 million we expect to be sold in China over the next 12 months. And I just wonder, though, the optics, the signaling for domestic China, for the people of that country. You put it together with Huawei and the story of the last week. Just how much pressure is there on this company going into that unveiling a week away?
Gosh, this is tough, John. But when Huawei came out with the Mate 60 Pro, before you even get to the question of sanctions, the logic in the market was that it would be the champion domestic player. You saw names like Xiaomi fall because they saw Huawei, which has been out of the smartphone market for some time, as a new threat to the domestic players. I guess you extend that logic to Apple, and if the Chinese government is cracking down on iPhone, which is their biggest market outside of America, right, is the Greater China region, is Huawei a threat to Apple? The thing that's muddying this is the geopolitics. I think AMH is probably better on this one, but we are seeing a tit for tat, aren't we, in the last 2 days? The timing of Mate 60 Pro with Raimondo's visit to China, and now the news flow about Chinese response on clamping down on foreign handset makers. I just want to make that point really clear, Jonathan. What we're reporting is principally this is impacting iPhone, but it applies to other non-Chinese handset makers as well.
Got it. A point well made. Ed, thank you. All of this going into the G20 later this weekend. Their stock is down by a little more than 4%. The broader market pulling back by 0.64 on the S&P. The iPhone ban that we're talking about specifically also weighing on Apple's supply chain. Micron, Qualcomm, Skyworks, all under pressure at the opening bell. Abby has more. Hey, Abby.
Hey, John. And this is really a numbers game because these, of course, are the chip companies that make the chips that go into the iPhones. So you can see how it would be a distress for some of these companies, especially those that gain more revenue from Apple. So there's a great function in the Bloomberg terminal, SPLC. It's the supply chain function. You get to see the supply chains on both sides of a given company. So for Skyworks, 58% of their revenues comes from Apple. Qualcomm, 23%. Micron, 6%. And then Cirrus Logic, 83%. Now, this then becomes a question of the move on the year in terms of what could be ahead for these stocks and valuation. Now, most of these names, they're actually trading at a double-digit discount to the group on valuation. Micron's the exception there. On the year, both Cirrus Logic and Qualcomm up just nominally. And after today, they're actually a little bit down on the year. So you could say it's priced in. Micron up 50% on the year. Well, after today, not up quite as much, but a big premium. Again, not a lot of revenue exposure there. Valuation strong. But Skyworks, Sean, this is the one that on the day is hit the worst day going back to October of last year. 17% higher on the year, 58% of their revenue. When you put that together, it's not really priced in yet. You could continue to see Skyworks be under significant pressure.
Abby, thanks for the update. Thank you. I want to stick with chips. NVIDIA bracing for another weak September after not having a great history in the month, falling 20% in 2022 and 7.5% in 2021. Isabel Lee on top of this one. Hey, Isabel.
Hey, John. NVIDIA is now still softer at around 3%, and it's on track for its second day of losses. But to your point, if history is any guide, then investors shouldn't be too alarmed. But this is important because September so far has been the worst monthly decline since December last year. So we've seen a spectacular rally in NVIDIA, and there's really no apparent reason for this kind of softer decline today. I talked to some traders this morning, and they were like, it's healthy pullback. Like, what goes up must come down. But some people have been skeptical of this rally. We have Robert Knott of Research Affiliate saying that, okay, NVIDIA may be riding a revolution in computer science, but this is textbook of a big market delusion. And when asked if NVIDIA popping can bring down the whole market, he said it's possible. For now, NVIDIA has rallied some 220% year to date, John.
What a ridiculous move year to date. Isabel, thank you. That stock this morning down by about 2.6%. The broader market on the S&P 500 pulling back about 0.5%, down a little more than 1% on the NASDAQ. Just to touch base with Apple again, that stock is down this morning by something like 4%. 7 minutes into the session. Turning to earnings, GameStop reporting second quarter sales that beat estimates in the first report since the retail chain ousted its CEO. Third Bridge analyst writing this: GameStop's second quarter results show encouraging signs towards the company's ongoing transformation plans to regain its presence in the video game retail industry under its new leadership. Katie on top of this one. Hey, Katie.
Hey, John. Yeah, GameStop's first report with Ryan Cohen as executive chairman, and went fairly well. You take a look at sales, they rose to $1.16 billion in the latest period. Analysts had been looking for an average of $1.14 billion, so a beat there. They did see a loss of 3 cents per share, but that too was a beat. And of course, GameStop has been struggling with the fact that the video game industry has been moving to online distribution rather than selling physical discs. That's a trend that has been going on for a while, but recent popular releases have helped cushion that blow, at least for the past several months, for GameStop. In particular, John, The Legend of Zelda, Tears of the Kingdom, that sold 18.5 million units in 2 months, and all told, GameStop's game software sales rose 26% in the period. And a big part of the reason why we're talking about GameStop right now is because it was one of the original meme stocks. We're talking about up 200% in 2020, almost 700% in 2021. A much tamer picture now, particularly this morning. Shares off by about 4%.
Remember what you said about Man United? I know absolutely nothing about video games. You ever played The Legend of Zelda? What was the game called?
Of course.
I remember The Legend of Zelda back on the N64, like
Yeah.
25 years ago or something, maybe longer.
That's where all my memories are formed. I haven't played Tears of the Kingdom.
Tears of the Kingdom.
Yeah.
Katie, thank you for that. Maybe that's for someone else. Katie, thank you very much. 9 minutes into the session, Apple recovering just slightly. We're down here by a little more than 3%. Seema Shah weighing in on the market implications of the big tech giant selling off.
We could see that some of those valuations of those big tech names, as they start to be pressured, that's going to pull down the wider market. For Apple specifically, it's a couple of months of maybe a couple of days even of struggles. And then the market goes back to responding and thinking about, well, what is the long-term productivity growth potential from Apple? And that's what drives the market.
Joining us now to discuss, Emily Rowland of John Hancock Investment Management. Emily, let's start with that pullback in tech. Are there reasons that you want to buy that pullback in places like Apple and elsewhere?
Yeah, certainly over the longer term. Look, the U.S. tech sector has been made of Teflon this year. It's up 40%. Nothing has touched it. So this news out of China, as Isabel just mentioned, maybe something of a healthy pullback. This is a stock that's certainly, not going to go under as a result of this. It's a higher quality name, great balance sheet, lots of cash. We think, longer term, those higher quality plays in the tech sector are going to be good for this late cycle environment. So certainly some short-term pressure here, some healthy selling, but longer term, we still like tech.
Emily, last time we spoke, you were pretty defensive. Utilities, healthcare, is that still the case?
Yeah, it is. And defensive sectors haven't really gotten a lot of love as of late, as markets are clearly still not priced for a recession. What we've seen as of late is these bounces in things like the ISM services data. We've seen, this morning initial claims, retail sales have held up. So I think this is, resulting in the market sort of pricing in this reacceleration and growth. And you see it, of course, in higher 10-year Treasury yields. We've seen oil prices pick up, which acts as a tax on the consumer. We've seen strength in the U.S. dollar, which puts pressure on multinational firms' revenues. And so all of this good news is actually being priced in a bad news way. You think about higher Treasury yields, for example, that's going to cause mortgage rates to go up and auto loans and credit card rates to go up. So I think that some of this good news is actually masking some challenges that are happening under the hood, particularly as it relates to the labor market.
This really is a framing question, Emily, and it's in the eye of the beholder in many ways. You mentioned crude at highs for the year, iron ore, multi-month highs, 10-year yields near cycle highs, dollar stronger, all of that stuff. Do you view that as a reflection of an extension of the cycle, or do you truly believe that's a recipe to finish it?
I think it's the latter. A lot of this bounce that we're seeing across commodities is happening as a result of China stimulus. So while the ECB and the bank and the Fed and the ECB are all working to contain inflationary pressures by raising interest rates, meanwhile you're seeing China and Japan actually stimulate. So you're seeing this massive divergence in central bank policy, which is causing the Fed to sort of have to be the adult in the room. China's making the Fed's job a lot harder by stimulating. Obviously, there's some other elements going on here in terms of oil price supply cuts. But I think, again, this is a cycle that is likely to unfold into recession, and we want to be really careful about sort of experiencing a head fake here.
Does that mean avoid energy equities?
Yeah, I mean, we've been underweight energy for some time. I think our view, again, is that we do believe that the lagged impact of central bank tightening is likely to tip the global economy into recession. And in those periods, demand has become a much bigger dynamic than supply. So we think that globally demand for energy should ultimately moderate. We'll see commodity prices once again roll over as that recession starts to play out. But clearly, we're not there yet. We're still in this very tricky phase of the late cycle environment, and I think portfolio positioning should reflect that.
Emily, out of interest, what would change your mind? What would change your mind about all of this? What would you need to see?
I mean, I think if you want to live on, soft landing island, which is clearly, what markets are anticipating here, I think you do need to see inflation meaningfully come down. I think you need to really start to see oil prices come down, and you have to believe that there are not going to be cracks to the labor market. The fact is we're starting to see them. We look at things like job openings. They've gone from 12 million to 9.5 million. We look at things like the quit rate, which is back to pre-pandemic levels, which means basically you're not seeing people feel confident about just hopping jobs to get more wages. You're actually seeing, things like strikes happening now as employees try to get more bargaining power here. We look at challenger layoff announcements. They've gone from about 23,000 last year to 75,000 as of the month of August. So these cracks are forming. We do think, again, as company margins get compressed, the cost of capital is elevated, revenue growth is coming off record levels, companies are going to need to defend those margins. And the biggest cost for most companies, of course, is labor. So I think that those cracks are going to become larger fissures in the labor market. But again, all of those dynamics right now are being masked from some of this better than expected data on the services and consumer side, which, by the way, is lagged economic data. Friends don't let friends use lagged economic data. We want to use leading economic data, which tells us, again, we want to be a bit more defensive.
I'm guessing you don't think claims lead, based on what we saw an hour ago.
Well, initial claims are probably going to be the most coincident leading indicator. So that's something that we certainly want to keep an eye out for. But things can change so quickly on a dime. Once we start to see these cracks become bigger in the labor market, you'll start to see initial claims going up. And at that point, it's in the price. So we want to look at, again, the higher yields available in fixed income today as a great opportunity to prepare. The time to repair the roof is when the sun is shining. We think that's now, which is why we continue to emphasize higher quality bonds for that more attractive income potential.
You make it sound easy. Emily, thank you. Emily Rowland.
Thank you.
There's nothing easy about this. 15 minutes into the session, we pull back just a touch. No drama here. Recovering on the S&P, we're down about 0.5%. Apple with a much bigger weighting of the Nasdaq 100, about 11% of that index. A much bigger move there on the Nasdaq. We're down by a little more than 1%. Coming up, President Biden planning to cancel Arctic drilling rights sold by Donald Trump.
Oil, ultimately, it's a linchpin. It's the driver of most commodities, and it's the biggest component in all the futures commodity indexes. So the fact that oil's reached $90 per barrel is significant, and it means that the whole commodity index pushes higher.
Team coverage up next.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Oil, ultimately, it's a linchpin. It's the driver of most commodities, and it's the biggest component in all the futures commodity indexes. So the fact that oil's reached $90 per barrel is significant, and it means that the whole commodity index pushes higher. Crude oil's rising only because of the OPEC cutback, because otherwise demand has not really shifted so much. I'd say the economic side for crude oil has been bearish to neutral.
Conor Hack weighing in on crude and the economy. The Biden administration curbing oil development in Alaska, cancelling leases sold by the Trump administration in 2021 to drill in the Arctic National Wildlife Refuge. The Secretary of the Interior telling reporters, with today's action, no one will have rights to drill for oil in one of the most sensitive landscapes on Earth. Public lands belong to all Americans. That move coming right after extended OPEC plus cuts from Russia and Saudi Arabia tighten the market, with WTI sitting at new highs for the year. Let's get to the team coverage and head back down to Washington, D.C. and catch up with Anne-Marie and Kelly Lyons. Kelly, how have the oil companies involved responded to this one?
Well, there's not that many of them, John. We should note that these leases sold during the Trump administration back in 2021, that auction was a little bit of a dud. Only $14.4 million in bids from two companies in the Alaskan State Oil Development Fund. So it is less about that potentially and more about the mixed messaging it sends from the administration. That is kind of what you are hearing from the oil industry and its representatives in response to this. A spokesperson from the American Petroleum Institute said this industry needs clear, consistent policies in place to support long-term investment. That is the thing here, John. If you want these companies to be making long-term production investments in the U.S., they need to know really what the policy landscape looks like. And this move may be seen as stepping back on that, which is why you're also having Alaskan representatives, senators, others critical of this move as well. Given Alaska is a very heavily oil-reliant state, though its oil production has been in decline from 2 million barrels a day on average back in 1988 to around 500 barrels a day now. So maybe this means not as much is going to be drilled in Alaska, but potentially not as much is going to be drilled in the U.S. in general if policy is seen as unfriendly. And that is problematic given you have a supply and demand imbalance in the market right now, which has driven prices to the highest they've been since back in June of last summer, and prices at the pump are much higher as well.
AMH, do you think this is how you flex your pro-climate credentials just before we're about to see a headline on record crude production in the United States?
Well, to Kaylee's point, what you're hearing from Congress is what Senator Lisa Murkowski is calling incoherent energy policy. On one hand, the Biden administration has been demanding the oil giants to produce more. He wants to get a lot more crude out in the market so it could trickle down and mean lower gasoline prices, which, by the way, are now nationally just under $4 a gallon. At the same time, this president, just like he wants to be the most pro-labor union president in modern history, he wants to be the first ever biggest climate change president. And in this case, as opposed to Willow earlier in the year, that massive ConocoPhillips project where he really sided with the industry as well as under pressure from the unions, he's siding with siding with the climate change world and the activists who want to make sure that they're protecting this land. Yes, this land is a dream for the oil and gas industry, for the future of potential crude coming out of there. But it's also home to wildlife like polar bears, like caribou. And this administration says they want to promise to protect 30% of land and water by 2030, Jonathan. He's in a rock and a hard place.
AMH, thank you. And he might stay there going into next year alongside Kelly Lyons. We are about 23 minutes into the session. Your equity market on the S&P 500 is slightly negative. We're down 0.6%. Crude at the moment, WTI, $87 a barrel. Your trading diary up next.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip. A bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
This is Bloomberg.
Stocks lower for a third session. Let's get to the trading diary. Coming up, Philadelphia Fed President Patrick Harker at the top of the hour. More Fed speak through the day. Williams, Bostic, Bowman, Saturday. The G20 summit kicking off. Sneak peek of next week. Tuesday, Apple iPhone launches. A little bit later next week. And on Wednesday, we'll get US CPI. That is your main event for the economic data about a week away from New York. That does it for me. Thank you for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
Maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
News breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
There, the kind of upside.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Matt Miller here in the Interactive Broker Studio with Simone Foxman. Paul Sweeney is not actually out today.
He's like actually on assignment for the afternoon.
Yeah, he's filling in for somebody or maybe for 2 people or 3 people. I'm not really sure, but for some reason we've decided, why disrupt only one show? Let's disrupt 2 and move Paul Sweeney to Bloomberg Business Week. So you'll catch him later on. I'm glad to have Simone with me, though. We're going to talk about liquor today, and it's been over a year since I've had a drink, so hopefully you're knocking them back.
I can't say the same.
We're going to talk about tennis today. It's apparently very, very hot out at the U.S. Open. Nonetheless, they continue to play because we demand it. And we're going to talk about cars. The national head of the Mach-E program, Ford's electric Mustang, is going to join us, as well as David Welch, to talk about probably the more important issue. Will there be a strike, or could it be averted?
Yeah, and it sounds like there have been developments out just this morning, so we'll get the absolute latest with him. And you'll school me a little bit about the Mustang Mach-E.
The Mach-E. It's pretty controversial. Not terribly.
Okay.
But, is it really a Mustang? Anyway, right now, what do we do typically? We go to you, Tucker?
Yeah, we have a market
John
update.
Tucker joins us here with a business flash. John?
Thank you, Matt and Simone. Technology shares leading the declines this morning. NASDAQ 100 seeing an over 1% sell-off, 1.3% right now. Apple shares most active. They were down over 3%. U.S. labor market data that continues to defy gravity. The weekly jobless claims dropping to the lowest since February. Now, as a result, investors ramping up bets on further Federal Reserve policy tightening. Still, Patrick Armstrong, the chief investment officer at Plurium Well, sees the central bank as finished with rate hikes.
If I'm the Fed, I'm sitting on my hands right now, just letting the work I've already done play out. Economic growth, it's not overheating, definitely. The job openings are falling. It's still a pretty comfortable job market. If you're looking for a job, there's still 1.6 openings for every unemployed person. But sitting on their hands is the best course of action.
Right now, the NASDAQ 100, 207 points lower. That's a decline of 1.4%. S&P 500, 30 points lower. That's down 0.7%. And bucking the trend right now, the Dow Jones Industrial Average up 5 points, 34,448. 10-year yield is relatively unchanged, 4.28. The 2-year right now, that's right at 5%. That is actually down 1 basis point. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Simone and Matt. Thank you so much, dude. Why don't you turn your microphone on?
Thanks, Matt.
Thank
Thanks,
you so
John.
much. It had been on. Did I turn it off? I think Ken Felliu is messing with me in the control room. In any case, Bailey Lipschultz joins us here. He covers equities for Bloomberg News. And we have an interesting setup today because tech stocks are down. So the NASDAQ is off more than 1%. The S&P down more than 0.5%. But you actually see slight gains in the Dow.
Yeah, you're seeing, I was just going to call that out, NASDAQ 100 down 1.4% because Apple is down almost 4%, NVIDIA down 3.5%, Broadcom down 3.5%, Tesla down 3%, Qualcomm down almost 6%. So a lot of money moving away from technology shares. Obviously, this coming on the back of an extended sell-off for Apple after those changes in curbs in China as far as being able to sell and use iPhones for people backed by, or people who work at government-backed agencies and state companies. So you're seeing investors maybe getting away from Apple. Again, this is a market, especially the NASDAQ 100, driven so heavily by a handful of stocks. So we're seeing a bit of weakness across those companies in particular. One of the other worst performers in the S&P 500 is Seagate Technology, down 9.5%. This coming after Barclays downgraded shares on an expected delayed recovery, saying a nearline recovery is a finger in the air exercise at this point, and most likely comes later than advertised. That's according to the analyst again at Barclays, downgrading shares to equal weight from overweight. But on the upside, we are seeing strength for WestRock, up almost 5% right now after reports and an update from the company that WestRock and Smurfit Capital, or Smurfit Kappa, one of my favorite names, but I can't pronounce it apparently, that they may merge and create an industry giant valued at about $20 billion. So seeing a bit of strength in the cardboard container space in what it really is a pretty rocky tape.
Yeah, I mean, well, the cardboard container space, wasn't that one of those leading indicators of economic slowdown? But here, WestRock, Smurfit, oh my God, I got it right. Fantastic. Industry giant of a market could get together if those talks proceed, potentially create an industry giant with a market value of $20 billion.
And Simone, the interesting thing, that would take another company away from a UK index. So Smurfit right now listed in the UK. If they merge, they'll come over here to the good non-dark side here in America, in New York. And that's another kind of loss you've seen. Just Eat Takeaway leaving. You saw we're going to see ARM listing here in the US on the NASDAQ in the coming week or so. So more losses for the UK on the back of Brexit and what really has been, at least when I talk to people in the ECM world, there's no real reason to want to list in the UK unless you feel some strong type of way about nationalism.
There's a couple of industrial companies making news today. Ford's one that we're going to talk about a little bit later because they're giving raises to 8,000 union workers ahead of the contract deadline. So maybe they're trying to butter them up a little bit to avoid a strike there. The shares are off. And Boeing, those shares are off even more after they said they're going to come in at the low end of 737 deliveries.
Yeah, and we thought initially that maybe Boeing would actually get a lift because even though they're coming in at the low end, it maybe would not be as bad as feared. The stock started in the green, now down about 0.9%.
Still in the range, right? I mean, at least it's in the range forecast.
It could be worse. And this is a market right now that if you, completely whiff, you're going to get absolutely punished. And the one thing to keep an eye on, or keep in mind, I guess, is that Boeing still is up almost 40% over the last 12 months. So still has been performing quite well. Again, not outperforming relative to those big tech companies that have been rallying, but still seeing a bit of gains, giving back some of those and not quite near the levels it hit at the end of July, but still trading quite well. One other stock on the radar, C3AI, down 16% after results and comments on profits, missed expectations. One of the things that stood out to me was a lot of analysts and investors really pointing out that C3AI not really benefiting from this AI hype, this AI mania. Yes, it's trading at $26. It started the year closer to 10, but
down about almost 50% from a peak back in June. A lot of questions around what lies ahead for the company, just given.
Dude, it's also, I mean, you cover meme stocks, right? So C3 AI is a company that we talk about all the time because it has AI in its name.
But it's AI is the ticker.
Exactly, but it's only a $3 billion company, right? I mean, we talk about it so many times in the same sentence as NVIDIA, which is a $1 trillion company.
Yeah, I mean, it's also one of the few AI companies that are publicly traded. So again, like Simone mentioned, its ticker is AI. It also is led by Tom Siebel. So you've got like legitimate people around it. But as you mentioned, it's a drop in the bucket compared to really what NVIDIA is, where people.
Well, or the other AI companies, right? Like NVIDIA, Microsoft, Google. I mean, these are all publicly traded and much, much bigger.
Well, how about Palantir too? Where,
yeah.
And there, the message from Morgan Stanley has been, you know, we gotten out ahead of ourselves. I mean, we were so hyped about some of their new programs, particularly the program, the AIP, that's going to get marketed to governments.
Well, Palantir says, you know, this technology may be too dangerous for their clients, but they're going to sell it to them anyway.
Talking about meme stocks, though, Palantir was a meme stock back in 2021, just given kind of.
Well, it's a Peter Thiel
Yeah.
play, right? So it's got like big backers. It's 10 times the size of C3 AI.
It does a lot more than what C3 AI says it does.
Well, you know, I should note, actually, shares of Palantir down 5.8% in trading today. When you look at NVIDIA, shares down 3.2% as well. I wonder whether this isn't that whole question marks about whether the market's gotten ahead of itself about AI really playing in today, whether that's leading markets, whether just, you know, C3 AI coming in and kind of adding these question marks about all of this.
I think it's still an unknown. And when you look at the market has been, again, so heavily dominated by large tech. You look at NVIDIA, which has more than tripled this year, even though it's coming down. A lot of excitement, a lot of kind of euphoria around wanting to get in on the AI game. And one of the things that I was talking to a portfolio manager about yesterday was it's easy to miss when everyone else misses. So if you're buying NVIDIA because everyone else is buying NVIDIA, that's fine. But if you sat out and didn't buy NVIDIA for the last year, you're probably out of a job.
AMD also down 3%. Yeah, adding to this conversation.
No, I mean it's a risk-off day. And when you're seeing semiconductors index down almost 3%, you're seeing the NVIDIAs, the Teslas underperforming and kind of weighing. And obviously, Matt, as you mentioned at the top, the NASDAQ 100 well underperforming the Dow, even though Apple is in the red for the Dow. It does seem like investors are right now kind of leaning into those September fears that it's going to be a choppy month.
Yeah, absolutely. And September, as we know, is the worst month of the year for stocks, at least going over the average of the last 29 years.
Yeah.
You do 30?
Yeah,
I
so
can
the
only
average,
do 29 in the SEAG function. I can't get to 30.
I rely on the extreme competence of our markets editor, Dan Curtis, as well.
And Dan Curtis.
Down 0.7% on average.
All right, Bailey Lipschultz, thank you very much. We're done with you. Let's get on to, well, Molly Smith is in the studio, and normally she's Bloomberg News and economics editor, so we would talk to her about the initial jobless claims, and we'll get to that. But first, I want to ask about how much we want to punish these tennis pros. I mean, we don't care if they pass out on the court, right? They will play if it's 100 degrees because we want to see a game.
I think, you know, this is, making me think a lot why the U.S. Open doesn't, at least that I'm aware of, doesn't seem to have an official heat rule, or maybe it does, and like they've deemed that we have not hit the threshold yet to enact it. When they play in the Australian Open, which is in January, that's obviously the summer over there, there's obviously some really brutal heat there. So they have rules when it gets to a certain temperature, play is suspended. Here in New York, it's more an issue of the humidity, but also it's been in the 90s this week. Last week was really mild, and now the players are really suffering. And I feel for them. I mean, just walking into here this morning, 20 minutes at 9 a.m., not the peak heat of the day, still awful outside.
I walked in at 7:30 a.m. this morning. I was glistening. I mean, if we say
Good glow.
have any players actually like stepped away from the competition? Or
You've
is
had
it,
some. Medvedev was complaining about it, and he has won the U.S.
But it's
Open.
complaints at the moment. It's
Yes.
not people have decided to actually say.
That's a good point. Yeah. Normally, I mean, yeah, it wouldn't be uncommon to see somebody retire because of the heat conditions, but we have not seen that yet, at least not that I've been aware of. But yeah, Medvedev was complaining about it last night in his match against Rublev in the quarterfinals, which he won in straight sets anyway, but has a pretty good record against this guy, so managed to get through it. But yeah, he was actually.
Is the guy like the godfather of his kid also?
It is, yeah. It's a crazy story. Yeah, so they're very good friends. But he was actually calling for the doctor during the match, and the umpire didn't understand him, thought he was saying water. I guess maybe his accent somehow, or it's pretty loud down there, got lost in translation, but he had to spell out DOCTOR at the changeover to call for one.
All right, so what's the forecast, the weather forecast for this weekend? Because we want to see good finals, right?
Yeah, I mean, I'm not, let's see, a meteorologist reporter now, too. I just cover tennis and the economy, but well, I think it's been hot and humid and going to stay that way. Maybe some rain?
Yeah.
Maybe
Tucker says it's going to rain.
All right, we'll take it. That would be nice.
And I believe it today might be the hottest. It feels like right now, for those of you not in New York or sitting in your air-conditioned cars or offices, it feels like 95 degrees. It is not yet. It's 10:15 a.m. Oof.
Yeah.
All right, Molly, 216,000 initial jobless claims. Is it the lowest number since February?
Pretty good. Doesn't sound like a recession to me.
So what is it? What lifeguards going back to school here? What's the story?
I mean, we can't really tell, from week to week really where the, you can see by states. You don't know why by profession where the numbers are coming from, but we did see some big drops in Ohio and in New York. Something actually that our Bloomberg economists had noted was that in Ohio, it's been a bit volatile over the summer because the automakers go through a retooling period when they're making like the new car models. So this is a time when, sometimes the claims can be a bit volatile over the summer, but also in Ohio, apparently fraudulent claims there as well. So we've seen that with a couple of states still dealing with the aftermath of that from COVID when the system was really being taken advantage of. So there still could be some kinks in the process to work out.
Why is this ongoing from COVID, these fraudulent claims?
I think, there's still, it's tough to say. I mean, I even remember we wrote up when George Santos was getting, all of his, counts handed down to him. One of them was that he had, claimed unemployment when he was not eligible for it and had, ended up getting, a lot of money from the system when he was in fact working during that time. So I think it's, it's possible that people can still just be trying to get unemployment and see, test their luck. It's hard to say, and different states have handled it better than others. All right, this afternoon, Mike McKee's going to talk to John Williams. He thinks that we have that we're in a new kind of lower R-starred environment. This has been kind of the debate, although I find it a little bit silly because it's such a theoretical number anyway. What are you hearing? Yeah, I think there's been a lot of talk about R-star, so that's the like real interest rate in the economy. It's tough. I mean, some people are really calling it. It just goes to this debate then of like where you are, if you think we're going to be in a higher for longer or a lower for longer world. And I think John Williams is more on the lower side of that, if I remember correctly.
A lot of people, I think, disagree with him, which is why I point that out.
Yeah, no, it is interesting. I think a lot of people would probably take the other side of that argument and say that like we're just in a structurally different economy right now that calls for higher interest rates and arguably a higher inflation target.
R-star is essentially the level of rates at which it doesn't cause inflation or deflation, right? Right. So, but right now the Fed has its target rate at 5.5 to 5.75. How do you work out R-star from that? Well, they would say, I mean, that's, I think, what the Fed is also trying to determine right now in like getting to what they deem to be a, quote, sufficiently restrictive level. So that would obviously be a level that, is not R-star, that's more higher than R-star. Yeah. Right. This is something that's trying to rein inflation in, not necessarily keep it stable. So that's really the debate right now. And that's why it's,
crucial to see what this, if we're going to get that second hike or not that the Fed had flagged in June that could happen this year.
Okay, I should point out I was off by 25 basis points. Actually, the upper bound right now is 550. We haven't got the upper bound to 575 yet.
Not yet.
Yes.
People are talking about the possibility that it could happen maybe in the November meeting now. That's when they think a live meeting. Anyway, Molly, thanks so much for joining us, our economics editor, tennis reporter, and you should work on your meteorology chops there. Matt Miller here with Simone Foxman, the Interactive Broker Studio. This is Bloomberg. Let's get over to Lisa Mateo right now. She's got our company news. Lisa?
Thanks, Matt. Google wants all election advertisers to disclose when their messages have been altered or created by AI. More from Bloomberg's Ed Baxter.
The policy update, which applies starting mid-November, requires election advertisers across Google's platforms to alert viewers when their ads contain images, video, or audio from generative AI. They will have to use prominent language like "this audio is computer-generated" or "this image does not depict real events."
Now, shares of Google's parent company Alphabet right now down just a fraction. But shares of Apple, they're also lower. They're down more than almost 3.5% and on track to wipe out $194 billion of market value in just 2 days. Now, all this as China plans to expand a ban on the use of iPhones to government-backed agencies and state companies. Bloomberg's Alex Webb has more on why China is taking these steps.
We have seen, obviously, a crackdown on the supply of some important components into the Chinese market. We've also seen the US ban the use of TikTok in government agencies. We have started to see a pushback on the role of, for instance, consultants, and do they have an outsized role because of their proximity to foreign groupings? There are many reasons why this might be the case. That doesn't necessarily mean that it's significant for Apple itself.
Now, to hear the full conversation, you can check out the Bloomberg Daybreak podcast. Download it wherever you get your podcasts. And Apple could be facing a new challenge. The Wall Street Journal reports Huawei Technologies started selling its own high-speed phone. Now, the initial batch of the Mate 60 Pro, priced at $960 per presale, sold out within hours. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Red on the screen, risk-off sentiment. Apple leading declines in all three of the major stock indexes. Part of the story, the fear that China policy is going to cut into iPhone sales. Another part of the picture is the data. The idea rates are going to stay higher for longer. That view being reinforced by the latest on jobless claims. They came in a lot better than what was expected. Right now, the S&P 500, 26 points lower. That's down 0.6%. 44.39 on the index. The Dow Jones Industrial Average, 38 points lower. That's down 0.1%. The Nasdaq 100 down 152 points. That is down 1%. So pairing some of the earlier declines right now. 2-year yield essentially lower, down 1 basis point, right under 5%, 4.99. We'll call that. And NFL season, it starts tonight. I think it's Detroit, the first game, and against Kansas City. Good luck, Detroit.
The Chefs.
Anyway, FanDuel and DraftKings, they are trying to latch onto a new audience as the season begins, doing anything they can to get you to bet. FanDuel bumping up its sign-up promotion to $200 in bonuses for a $5 bet for the NFL season.
That's nice.
It's
good
nice.
to be in a business that people can get addicted to your product, you know, because as long as you get them hooked, then they have no other choice. You know? Cigarettes, gambling, booze.
Take the words right out of my mouth.
John Tucker, thank you very much for that. Let's get over to our legal reporter, Ava Benny Morrison, right now. She's at courthouse here in New York to talk about breaking news on the FTX case. We have seen across the Bloomberg terminal that Ryan Salome, formerly of FTX.
He's planning to plead guilty, it sounds like.
Exactly. He was an executive along with SBF, with Sam Bankman-Fried, and it looks like he's going to plead guilty criminal charges over the collapse of that cryptocurrency exchange. Ava, what do we know?
We know that Ryan Salome has been in negotiations with prosecutors for a while now. Today he is going to front the federal courthouse in downtown Manhattan and enter a plea of guilty to criminal charges. We don't know yet exactly what those charges are, or whether that means he will also be a cooperating witness and agree to testify against Bankman-Fried or not.
Yeah, what does this mean for the potential cases against some of the other players in this, you know, Bankman-Fried, some of his other former colleagues, Gary Wang, Carolyn Ellison, Nishad Singh? What do we understand, and what does your reporting suggest about his willingness to cooperate with prosecutors there?
Well, from our reporting and talking to different sources, the sense we've got is Ryan has been digging his heels in about cooperating with prosecutors. So we understand that this will more than likely be a plea deal. He will agree to plead guilty to certain charges, but he doesn't want to testify against Sam Bankman-Fried. And prosecutors actually suggested that in a court filing a few weeks ago, saying that Ryan Salome had said he would take the fifth if he was called to testify. Worth noting here that prosecutors already have 3 former executives from FTX and Alameda Research, Caroline Ellison, Gary Wang, and Nishad Singh, who have pleaded guilty to their conduct as well and have agreed to cooperate with prosecutors.
What do we know about how much money these guys have, or gals, in terms of Caroline Ellison? You know, I think it's interesting that they're able to mount these legal defenses, and they're not using state-appointed lawyers. So do they have still a ton of cash stashed away?
That's a really good question. We know that some of these executives received huge loans from Alameda Research. We're talking tens of millions of dollars here. But some of the executives like Nishad Singh, who have previously pleaded guilty, have also agreed to forfeit some of their assets, including property. So it's unclear, but it's a really good question. They're not using public defenders, they're using private attorneys. So it'd be interesting to see, you know, just how much money they still have and whether that could potentially be clawed back by the FTX bankruptcy estate.
Ava, really interesting stuff. Thank you for staying across this. This is Ava Benny Morrison. She's our legal reporter for Bloomberg News at the courthouse in Manhattan. Now let's turn to one of the other large stories today. A Bloomberg exclusive that China planning to broaden a ban on the use of iPhones in sensitive departments to government-backed agencies and state companies in China. Anurag Rana is our senior tech analyst with Bloomberg Intelligence, and he joins us by Zoom now. Anurag, it sounds like this latest story is essentially expanding the scope of these restrictions.
They were already banned?
Well, they weren't banned, it sounds like, but it sounds like for some reason the markets believe that the scope is much broader than it was yesterday. The Wall Street Journal report coming out that, people were not being asked not to bring their iPhones in. Is that right here?
Uh-oh. Anurag, are you muted? Unmute yourself.
Oh, I am so sorry, Matt.
No problem, dude.
All good.
So yeah, we have been using the words expand a ban, broaden a ban. Did they already ban iPhones?
So I'll tell you, I talked to the analysts in Asia, and they basically said, listen, if you are a Chinese government official, it was basically bad manners for you to even show your iPhone in the office. This was not to be used at work at all and under any circumstances. So this is just an extension of that. But to be very frank, financially, I would say government official not buying the iPhone is not going to be material for Apple. But the question really is not so much about that. The question is the close relationship that China has had with Apple, or the Apple has had with China, are we seeing some kind of a dent in that? I think that is the biggest question here, because as everybody knows, Apple's very dependent on China for all its parts, all the assembly. And frankly, if you were to look at all the U.S. companies, Apple's done so much better than anybody else since even the tariff war begins. Apple was basically insulated from all of that.
Well, and Apple shares, I guess, reacting here, down 3.7%. But, do we have any indication that this would spread not just to the, 20% of sales, roughly, that that Apple does in China, but also to the manufacturing end? Or is that just kind of the market's thinking ahead?
Yeah, that's really what the big, the danger here is. Few government officials not buying the iPhone is not going to move the needle at all for Apple. But the question really is, are they going to try to restrict other things? We're going to have, tariffs. It's all those things that are coming into play. But, we'll find out, I would say, in the next 6 to 12 months if there is any change in relationship. Apple's done a phenomenal job of its relationship with China. It employs millions of people in China, not directly through its factories. As you said, it's 19% of Apple's revenue. So it is very overly dependent on China for a lot of things. So, I'm sure they're hoping that none of that changes because of recent events between the U.S. and China.
Apple shares not doing poorly. They're up 35, 36% year to date. But they have dipped below their 100-day moving average right now, trading at $176 even. What do you think about the stock, Anurag?
See, when you look at it, I think a lot will depend on this overhang now, because next week we're going to see the new iPhone coming out, the iPhone 15. We think it's going to do well, but at the same time, now we have another unnecessary cloud on top of this stock. So we have to figure out what this really means. I do not know whether when Apple announces the iPhone, if they're going to make any comment on any of these news breaks, because I think as long as this overhang is there, Apple will have a hard time in the near future.
How has Apple typically interacted with the Chinese government?
It's been amazing. They have done so much better than any other company in the Western world. They were not affected by any of the bans. They are very, widely welcomed there. In fact, one of the things we saw last year, there was some issue with the production of the Pro model because of COVID-19 restrictions in China, and that led to some, shortfall of shipments. But frankly, right about a month and a half after that, China changed their COVID policies. Now, I'm not saying they did it because of Apple, but they have been very friendly to Apple, and Apple's been very nice to them.
What's the biggest opportunity for Apple? Is it India?
It is China, actually. From a mathematical point of view, India is going to be very long term because the GDP per capita for India is only $2,500, while in China it's about close to $13,000.
Just quickly here, Anurag, because we only have about a minute left. What should we expect next week from the announcement of these new products? Is there anything that could really be a game changer?
I think the question really is the highest end model that they have. It's the iPhone Pro Max model. The biggest thing we are looking for is, what's the price of that product? Because that price has remained constant for the last 3 years. If there is any changes to that price, that really does wonders to the iPhone sales for the next 12 months, because that model itself is supposed to have a very high-end camera, much better than anything Apple's done in the past.
Simone's an Android user.
No, I'm
sorry to say.
I'm an iPhone user in part because of the camera. Well, and also because I moved abroad and had to get an iPhone. I can't remember the actual rationale, but
Android users, I feel like they spoil the fun for
just teasing
family
John Tucker,
and group chats.
who is an Android.
He has a green bubble. John Tucker has a green bubble.
I thought, that sounded like an insult, but then Matt went on to explain, Mr. Spock would have an Android.
I think Mr. Spock would be an Android
Which I
user,
take as
that's
an
true.
attack on my ears, Simone.
No, it's because you're a very technically savvy man.
Oh,
All right,
I see.
Anurag Rana, thanks very much for joining us. This is Bloomberg. Let's get down to Amy Morris right now in Washington, D.C. She's got your world and national news. Amy?
All right, thank you, Matt. Former South Carolina Governor Nikki Haley polled above President Biden in a hypothetical 2024 matchup. The new CNN SSRS poll showed Haley with a distant fourth in a crowded Republican field dominated by Donald Trump. Haley was the choice of 49% of voters compared to 43% for Biden, and the poll shows Biden essentially tied with Donald Trump. The Senate will start moving a package of government funding bills next week. Congress is racing to avoid a shutdown at the end of the month. Senate Minority Leader Mitch McConnell says he appreciates the support he's seen so far from President Biden.
He is supporting the effort, and I intend to continue to support it, and I hope the majority of my colleagues will feel the same way.
The president and congressional leaders are focused on a passage of stopgap funding measures to buy a little time while lawmakers iron out the budget, but time is short. The House is scheduled to meet for only 11 days before the government's fiscal year ends September 30th. Texas is under a level 2 power emergency. Soaring temperatures raising the risk of rolling blackouts for the first time since a deadly ice storm more than 2 years ago. This at a time when energy markets are already squeezed by oil production cuts in Russia and Saudi Arabia. Bloomberg's Eddie Vanderwalt has more on what the Texas situation could mean for inflationary pressures.
Whether this is happening in Texas or whether it's happening in New York or whether it's happening in London, and all of these places are to some extent prone as we move forward. You've got to hedge in higher power prices longer term, and that means that it feeds through into actual prices.
Bloomberg's Eddie Vanderwalt says power companies will have to invest a lot more in utilities, and that means they'll have to start charging consumers more now to pay for future needs. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major averages right now, they're mixed. Apple stock leading losses among the technology shares. It's the biggest individual drag in all the major averages. China looking to broaden an iPhone ban. S&P 505, the 11 major industry groups, they are lower right now. The latest data suggests the Fed's job isn't done. Initial unemployment claims dropping to 216,000. Ross Mayfield at Robert W. Baird says the data-dependent Fed now has a lot to chew on.
I think there's kind of a barbell there, some good news, some bad news, and it won't overly affect what the Fed wants to do. I think barring anything new, they should be set for a pause here, but I don't think it means that they won't hike again before the year's up.
Now, right now, the S&P 500, 21 points lower, a decline of 0.5%, 44.43 on the index. The Dow Jones Industrial Average, 20 points higher at 34,461. And the NASDAQ 100 down 137 points. That's a decline of 0.9%. So we're pairing some of the earlier losses there. And, yeah, we'll do some earnings for you. Dave & Buster's shares, the ticker symbol there, PLAY. They're declining. The restaurant entertainment company reporting second quarter earnings per share that missed estimates. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Simone and Matt.
All right, John Tucker. John Tucker, thank you very much for that. Matt Miller here in the Interactive Broker Studio with Simone Foxman. Paul Sweeney will be on later on this afternoon. He's going to join somebody, I guess, on Bloomberg Business Week from 3 to 6. I don't know if
Jess
up,
Jess Menton and Paul Sweeney.
Oh, so Carol's out and Tim's out.
And Tim's out.
They're probably both watching tennis, right?
I mean,
so Paul's in with Jess Menton. And we're looking forward to that. Right now we have Lisa Donahue, co-head of Americas and Asia over at Alex Partners, joining us to talk about, I guess we could talk a little bit about budgeting season, but to me it just goes to the spend, whether it's consumer or corporate. The former seems to be getting a little stretched right now. I'm not sure about the latter. Lisa, what do you think about corporate spending going into the last quarter?
Hey, good morning, guys. Thanks for having me. You know, on corporate spending, what we're seeing is folks are cautious. There's some confusing information coming out as to the state of the economy, with the Fed likely on pause for interest rates, at least for the moment. So corporations are approaching this budgeting season super cautiously, trying to do kind of zero-based ground up, not relying on past practices because you can't in this age of disruption. But I think that corporations are going to be looking super closely at closing out a strong fourth quarter and thinking very carefully about how they spend their capital dollars.
I'm wondering, because we saw initial unemployment claims come in this morning, the lowest since February, continuing claims, the lowest since July. Are companies actually seeing any of that tightness in the labor market slacken?
For sure. We talk with CEOs all the time, and what they're seeing is less turnover, but also a real need for upskilling of their workers, to partner with the rapid technological changes that we're seeing in order to be fit for purpose from a support perspective, making sure that their folks are getting the training, getting the interesting experiences that let them have careers, and making sure that you've got an engaged workforce and that they're thinking very forward about what we should be facing as it relates to AI, technological advances, et cetera.
One of the things that I've noticed, and I think some analysts have pointed this out, is that companies have been preparing for a recession for well over a year. I mean, are they just so well prepared at this point that hey, it doesn't even matter anymore. We can get through this and that would contribute, I guess, to this.
Yeah, they've done the work already.
Soft landing, right? Have companies done the work already?
I think for sure some companies have. Some folks are very proactively managing their working capital, trying to see around corners, trying to be the disruptor versus the disrupted. However, there's always going to be laggards, and there's always going to be companies that have not fully prepared, have not started thinking about firing their customers, customer and product profitability, SKU rationalization, operational excellence. So I would say that we have, you make an excellent point. We've been talking about a looming recession for a while, at least a year. But what we're seeing out there is that whether there's a capital R recession or a small R recession, the consumers are pulling back. And that's going to have a significant impact for CP companies, retailers, disposable income type buys.
So what kind of visibility do companies have right now, or what kind of visibility do you have in terms of the possibility of a recession? Everyone seems to be bringing forecasts down. Goldman Sachs now says a 15% chance, which is as good as none, really. On the other hand, you have had a Federal Reserve raise its target rate 550 basis points in less than 2 years. That's got to at some point have an effect, right?
Oh, it's for sure having an effect. And probably the greatest effect is on the capital markets and the cost of capital and deal making and thinking about the M&A market and what's happening with mortgage rates. That's another pressure that's going to hit on consumer spend. So yes, the huge increase with the Fed, the 550 bips, is having a ripple effect across the whole economy for sure.
We've been actually seeing a handful of IPOs recently in an IPO market that was very empty for a while. Can you talk to me about some of the motivations that companies are having when they decide to go to market? Why now?
Well, I think it depends on your sector, and I think it depends on what's happening, vis-a-vis your comps. So, the obvious reason to go right now versus any other time is an ability to actually tap the market. If you had been prepping it, and as you know, prepping a company for an IPO takes some period of time. So there's companies that are ready, they're prepped, and they're just waiting to pull the trigger when the market conditions are right for them. So the time would be liquidity. It would be monetizing, long-term investments. And again, I think it depends on which industry you're talking about and how they're trying to take advantage of market conditions.
What is the significance of a rate hike, if we get one or not? Does it matter if the Fed does another 25 basis points? We heard yesterday from David Kelly that would be dangerous, which I thought was an interesting choice of words.
Look, the obvious impact to a rate hike is, again, the capital markets, the liquidity pools, and the balance sheets of some of these companies that took on a lot of debt to get them through COVID and have not yet either found a way to grow into it, which is in most cases nearly impossible, versus refinancing, paying it down, et cetera. So another 25 bips, I don't know if it would be, I wouldn't call it catastrophic, but I would call it significant. And for those companies that are on the bubble and have, been juggling a lot of plates to try to deal with the increased costs and then the downstream implication potentially for more mortgage rates as well, I think it would have an impact. I think it would curtail consumer spending even further.
All right. Fascinating stuff, Lisa. Thanks so much for joining us. Always appreciate talking to you. Lisa Donahue there is co-head of Americas and Asia over at Alex Partners. Quick look at what's going on in the markets. We have a little bit of a split here because the S&P is down about 0.5%, little less, 19 points. Well, the NASDAQ is down 1%. The Dow Jones Industrial Average is actually gaining.
Yeah, and I mean, a reversal from what we saw just a few minutes ago, earlier this morning.
Simone Foxman is here with me for the next couple of hours. Paul Sweeney is on later this afternoon. I'm Matt Miller. This is Bloomberg. Let's get over to Lisa Mateo right now. She joins us with company news. Lisa?
Good morning, Matt. GameStop reported second quarter sales that beat estimates in its first report since the retail chain ousted its CEO. Bloomberg's Katie Greifeld says it's been a tough road for the game maker and explains what's been driving its revenue.
GameStop has been struggling with the fact that the video game industry has been moving to online distribution rather than selling physical discs. But recent popular releases have helped cushion that blow, at least for the past several months, for GameStop. In particular, The Legend of Zelda, Tears of the Kingdom, that sold 18.5 million units in 2 months. And all told, GameStop's game software sales rose 26%.
All right, and checking in with shares of GameStop, they are down nearly 2%. Instacart is gearing up to set a price range for its initial public offering as early as Tuesday, with trading starting Wednesday.
Instacart was valued at $39 billion back in 2021, according to PitchBook. But as the pandemic waned and diners began to go back to restaurants, Instacart's growth faded too. That forced the company to slash its internal valuation to about $13 billion last October.
That was Bloomberg's Gina Cervetti reporting. And Party City has received court approval to emerge from Chapter 11 bankruptcy as a smaller store chain, meaning that it's looking to avoid the fates of stores like Bed Bath & Beyond and Christmas tree shops, all of which liquidated their physical locations. Party City plans to keep most of its 700 existing stores open. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
Connection lost.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Paul Sweeney will be coming along later this afternoon. He will anchor Bloomberg Business Week starting at 3 o'clock to 6 o'clock. I always say it's the longest 3 hours in radio. He's going to make it a little faster.
But for now, you have us.
Yes, Simone Foxman joins me in the Bloomberg Interactive. It's great to have you with me.
I love being here.
I really appreciate you joining me. And we have a lot of really cool stuff coming up. Being that it's Thursday, Barry Ritholtz joins us, which is always fun. We can talk about cars with him. We also have David Welch coming on in a little bit. We'll talk about cars with him. And then we're going to also talk to Michael Sago about cars.
Yeah, a lot of cars today.
So
also,
be prepared
also
for
some
that.
liquor with Pernod Ricard.
That's true. Pernod Ricard, maker of the Glenlivet. Right now, let's get down to Washington, D.C. Amy Morris has your world national news. Amy?
All right, thank you, Matt. New York City Mayor Eric Adams is not mincing any words when he describes the support he's getting, or not, with the influx of migrants to town. Mayor Adams says more than 100,000 asylum seekers have come to New York City and that more than 50,000 are in shelters and that the city is running out of resources. During a town hall meeting, he said the lack of federal support is alarming.
Never in my life have I had a problem that I did not see an ending to. I don't see an ending to this.
The New York Times reports New York Governor Kathy Hochul's office in a letter claims Mayor Adams' team did not act fast enough and did not accept help from the state when the migrants began to arrive in larger numbers. Special counsel David Weiss intends to bring an indictment against President Biden's son Hunter by the end of this month. Hunter Biden had reached a deal for alleged gun possession by a drug user that would have helped him avoid prosecution if he abided by the terms for 2 years. But in July, a plea agreement regarding tax evasion charges collapsed. That has left the future of the gun deal in question. The oppressive heat still impacting millions of Americans in schools in New England now. A scramble to get air conditioning in classrooms. In Philadelphia, officials announcing schools that don't have air conditioning will be dismissed early for the rest of this week. Inglewood Health EMS Medical Director Dr. Barbara Schriedman says children are among the most at risk in the heat.
Children have a different physiology than adults, and the very young and the very old don't tolerate heat as well, especially when the humidity is higher.
The National Weather Service expects scorching temperatures to keep impacting millions through tomorrow in the Mid-Atlantic and Northeast, and then all the way through the weekend in and around Texas. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Matt and Simone.
All right, Amy, thanks so much for that. Amy Morris there with World and National News.
So let's pick up where she was talking about these heat waves.
Yeah.
Texas, out of control.
Absolutely.
Conditions deteriorating so quickly that the grid operator there skipped calling emergency level 1, which it went right to emergency level 2 in terms of power reserves dropping to critical levels. So the operator is going to have to call on more supplies to prop up the grid. So Texas, again, teetering on the edge of blackouts after that terrible winter 2021 storm.
Yeah, exactly. Last time it was because of the cold. I think February of 2021, there was an historic freeze across, what do we call it? The Lone Star State.
The Lone Star State, yeah.
They have a nasty independent streak, which prevents them from hooking up to the nationwide grid. So there are those who would say, well, it's your own fault.
I can understand, though, why. You know, they historically have had to fight off, you know, bigger federal powers. They sat under 6 different flags, right?
But they did have this major blackout back in the winter of 2021. The Texas GOP had claimed that comprehensive grid overhauls would prevent blackouts. But here we are, spot power prices surging to more than $5,000 a megawatt hour multiple times Wednesday evening. And this, of course, puts us, that was quadruple the cost of power supplies for that period in the day-ahead market. So this putting us on the edge of blackouts.
Remember when Matt asked me to name all 6 flags that flew over Texas?
Because you're from Texas.
Spain, France, Republic of Mexico, Republic of Texas, Confederates, and then the U.S.
Nice. Well done. Texas history. Remember the Alamo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Matt Miller here in the Interactive Broker Studio at 731 Lexington Avenue, our global headquarters, with Simone Foxman. Paul Sweeney is off until this afternoon. He'll be joining Jess Menton on Bloomberg Business Week from 3 to 6
Great
p.m.
team. Yeah, but for now you have us.
Yeah, for now you have me and Simone. Well, and we have Jess as well. We're going to get to her in just a moment. First off, John Tucker with the Bloomberg Business Flash. John?
All right, Apple, the most actively traded stock, down 3.2%, the biggest individual drag in the major stock averages, also leading a slide in tech shares. China plans to expand a ban on the use of iPhones in sensitive departments, so that has investors thinking maybe Apple sales are going to take a hit in its largest international market. The Fed is data dependent, better than expected jobless claims. They suggest they have more work to do. Tony Dwyer, the chief market strategist at Canaccord Genuity, not bullish of stocks. He offers this advice for investors.
I want to buy the weakness versus trying to play it. I just don't see how you're going to get double-digit growth in earnings next year when you're already at full employment and absolute level of rates remains at the cycle high.
Right now, the S&P 500, 19 points lower. That is down 0.4%, 44.46 on the index. The tech-heavy NASDAQ 100, 136 points lower, down 0.9%. So pairing some of the earlier losses, the Dow Jones Industrial Average up 41 points. That's up 0.1%. They're getting a boost from McDonald's shares. The shares rising after Wells Fargo upgraded the fast food chain to overweight. They expect the company to stand tall, their words, as quick service restaurant trends do slow. This is a personal anecdote. I don't often go to the McDonald's drive-thru. Every time that I have gone, you place your order, you pay the cashier, move up to the next window, expecting your food because it is a fast food restaurant, and then they tell you, can you pull ahead into the parking space? We'll have somebody bring it out to you. That's not fast food.
I don't know if I've ever had that happen, actually.
No,
every time I've gone in the past couple of years, that has happened to me.
I would, so first of all, I would never go to McDonald's in my own car because the smell will never leave it.
Wait
Tucker
till
is
your
able to
kids
do
get
this
older.
because he puts kitty litter across the back seat to absorb the odors.
When your kids get older, are you going to, like, kid-proof the cars?
I mean, they won't be going to McDonald's. I'm a Wendy's man from the great state of Ohio.
Oh,
Wendy's was founded in Columbus, so I have
Whataburger in
to make
Texas.
that choice. Nice, Whataburger. That's actually an Infinite Jest reference if you ever get around to reading that book. Jess Menton here in the studio with us to get sort of a look at what's going on in these markets. And we have an interesting trade because the NASDAQ and the S&P are down, but the Dow is up just a little bit, but still going in different directions. You don't often see that.
Right, and you look at the NASDAQ 100 down more than 1%, off a little bit from its lows, but the S&P 500 down just about 0.4%, so also has come off of its lows. But, I mean, not surprisingly, especially when you have a stock like Apple, that's ticker symbol AAPL. If you use MEMB for the S&P 500 or for the NASDAQ 100, that's where you can see the
Use
weightings.
MEMB instead of WGT?
I use MEMB, but...
But does it do the same thing? SPX index WGT. That shows me member weightings.
There we go. Oh, another way to do it. I
Nice.
just do MEMB.
I always feel like I learn from you guys about terminal functions.
Well, I mean,
every time.
Matt's been doing this for a couple
23
Yeah,
years.
there we go. So he's the encyclopedia for a lot of those. But that's the one that for me. So when you look at the S&P 500, 7% weighting. So obviously the biggest one, as we know, for that index. But then even larger when you're looking at the NASDAQ 100, about an close to 11% weighting. So when you do look at, obviously some of those concerns about what's going on with China. I mean, China has long been at the heart of Apple's supply chain. So there's actually about 80% of the company's manufacturing partners that actually hold a footprint in the country. So that obviously looking ahead to what's happening on September 12th is actually that iPhone 15 and Apple Watch event.
You know what's so fascinating? So Apple is 7% of the S&P 500.
Right.
It's 11% of the NASDAQ. It's only 3% of the Dow Jones Industrial Average.
So then that's why you see the difference there. And obviously
United Health is bigger. Microsoft is bigger. Home Depot is bigger. I mean, McDonald's is bigger. Salesforce is bigger. Honeywell is bigger.
Right, and so then with the Dow being price weighted versus cap weighted for obviously the S&P 500 and NASDAQ too, so then that kind of changes things up as well. So that's why you're seeing the Dow pretty much just marginally higher compared to when you're looking at some of its bigger counterparts there. I had to also point out, because I was talking to Matt about this earlier in the week with the dollar. I know sometimes with technicals, he gets excited about those things, but I wanted to bring it up again. It triggers him, but why not? Right? It's Thursday.
I mean, price weightings also trigger me.
I'm sorry.
What the heck is that? Why would you weight your index that way?
I mean, that's what the Dow does.
I mean, when you split your shares, then all of a sudden you're worth a heck of a lot less in terms of
also,
weightings?
When Apple did do that split, so then it was able to go in the Dow about, 7-8 years ago, but maybe we can go on.
All right, so what's the technical?
The dollar? Matt's tired of it. I'm sorry.
What's the technical analysis?
I'm sorry, Matt. I just had to point it out. Okay, so DXY, looking at that was a clear technical level that was breached is the 103, so it stayed above that. So right now, when you look at that, it's at its highest level since March. So that was something a lot of my sources coming into September were watching, in addition to obviously yields, for how that would affect the stock market. So the last 6 Septembers in a row, you have seen dollar strength that month. Some of that is correlated just because we do always typically have a Fed meeting, obviously, in September. But when you look at that, still moving higher, they're trading around at 104. So that's something that are on a lot of my sources' minds, in addition to just looking at where the 10-year or the 2-year would be as far as what that could mean for stock prices, because typically when you do see the dollar have a bit of strength there, it typically does weigh on stocks.
I will just say that the Bloomberg Dollar Index,
yes, I knew that was coming,
I think tracks a more representative basket of currencies by considering global currency market liquidity and trading partners of the U.S. better than the ICE index, DXY.
Yeah. I mean, that's also another one, obviously my sources were watching, but it was like the 103 for the DXY, which was a clear technical level. But I know you don't like to talk about that. I'll also bring up RSI just for you, Matt.
Wait, can I say it as well? The Bloomberg Dollar Index is also at its highest since March.
Right.
So
yeah.
Thank you.
What are we at? 1255 right now? 1257.
1257.
Yeah.
So the RSI right now, when you look at that for the DXY, it's actually right at 70. So that would be, which Matt doesn't buy that stuff, but there's money stacked up at particular levels. But it is when you are at that 70 level, that's typically what would be more of a overbought kind of threshold. It hit just below that towards the end of August and then came back down just slightly, but it's around there again. So something that's been on people's.
I mean, I do sort of buy it, because if everybody buys it, then it works. But it takes the faith of the market for those.
Right. Or then maybe perhaps
indicators.
too many people start talking about it and
exactly maybe self-correcting. Still, look with the yen at 147, 148.
Yeah.
You could, I think, fairly expect some intervention coming out of Japan and
it was the
China.
145 level that was really key.
When they did it last year.
Yeah, and so that's something where it's continued to be above that the last few weeks. So that's something, too, when you're looking at what that means, especially for the Bank of Japan. Another stock I wanted to point out just quickly, after the closing bell, we actually have DocuSign that's reporting. So that's ticker symbol DOCU.
I love DocuSign.
Yeah?
Makes my life so easy.
I mean, if you look at year to date, down about 6%. I know you like to use the comp function to bring it back even further. So if you look for the past 5 years, though, down about 8%.
That's so weird.
It is.
I can't imagine. I mean, it prompts questions to me about how the company is run. Because certainly the product is so widely used.
Right.
I mean, I must get sent documents via DocuSign at least once a day, if not more often.
Yeah, if you look at the last 2 years, if you go back to 2021, it's down 82%. But obviously there was other things going on there. But so for its projected second quarter billings growth, it's supposed to be around 1%, but Bloomberg Intelligence actually thinks that estimate might be a little bit too conservative there. But that's another big name, even though we're obviously through the majority of earnings season, but that's something that is on investors' radars after the closing bell.
All right, Jess, thank you so much for joining us. Always a pleasure having you here in the Inactive Broker studio with us. Jess Menton is going to be back on later today with Paul Sweeney, anchoring Bloomberg Business Week from 3 to 5 p.m. Right now, I want to get over to Detroit, the Motor City. David Welch joins us. He's a bureau chief leader there, and there's so much to talk about around cars, David, but I guess the main focus for investors has to be whether or not this strike comes to fruition or not. It looks like Ford's trying to get ahead of it. Am I reading this right in terms of buttering up 8,000 workers with pay rises already?
Yeah, but that was in the previous contract that it was coming. But I think Ford's highlighting that and saying that the raise they will get, this is maybe the important piece, they will get in the new contract is compounded on top of that one. They're trying to show that they pay their people fairly. Ford's they've not only been the most aggressive in getting an offer to the UAW, but also making it public and showing the workers and the general public that they treat their workers pretty well. And look, Ford has not been the strike target since the 70s, in large part because they have good union relations compared to the other two. So I think they really want to get a contract done, not have a strike, and move on with their lives.
Yeah, before we shift to some of the others, it sounds like, based on your reporting, that the United Auto Workers is supposed to make a counteroffer to Ford today. I mean, do you think this at least gets us very close to something that could resolve the issues between the UAW and Ford?
Not today. I mean, September 14th is the deadline, and I think they're going to run right up against it. Remember, the UAW came in with, they proposed 40% in increases, but if you compound that over each one, it's actually 46%. Ford came in with 9%. That's a pretty wide gulf. That's a large bid and ask. So they're all going to have to come a lot closer on that. And I doubt it happens in one formal offer from one side or the other. I think this is going to go back and forth. And look, I've covered a number of these things. I don't know why they do this. They have their handshake or not handshake, as the case was this time, but they kick it off in July. And it's kind of like not a lot happens on the economic issues, which is what everybody cares about, until the last